Good morning, everybody. Welcome back to another episode of the Market Open. It is Monday, May 19th. We are here. We are starting off the week on a Monday morning. We've had a lot of stuff actually happen over the past 24 hours, given Nvidia had an entire conference in Taiwan, and we're going to be talking about the implications of that conference, what it means, some actual important updates we got that I think are only going to make anyone who is bullish on Nvidia even more bullish on Nvidia. But we'll be talking about that because that's kind of one of the main headlines we got this morning. On top of that, we have Moodys, which happened on Friday after the close. A bunch of updates over the weekend in terms of that downgrade, which has stocks down red in the pre-markets. Quite frankly, I think stocks are not down just because of Moodys. I think stocks are down because they needed to go down on something. We were winning a little bit too much, 25% up from the lows on the S&P 500 or on the QQQ, 18% on the S&P. Probably needed something, some type of headline that could get stocks to consolidate a little bit at these levels, and it just so happened to be Moodys. So I think right now the pre-market red that we're seeing, which was even worse at like 5 a.m., and now it's like actually kind of recovering, even though we're still red, is really just not that big of a deal. Robinhood right here, 59.13. Tesla's at 336. I mean, we're down. I'm not saying we're not red. Palantir's at 124. Nvidia's at 131. But it seemed kind of inevitable given the week we had last week. We gave back some of the gains, except we gave it back a week later versus it during the week in and of itself. So we got some of that stuff going on. Japan has some issues that we'll talk about. Some issues that are a little bit concerning. I don't think it's yen carry trade type of concerning, but it could turn into yen carry trade concerning. UNH, by the way, right here at 305. So this one is green, and it makes sense why this is green. The biggest healthcare company in the United States fell 50% last week. It's back up to 305. So if you bought the dip on that, congrats. But the 10-year is now officially above 4.5. It's actually making its way to 4.6. And, it's not the best thing in the world, I would say. So we're going to have to figure out what we do about this 10-year. Japan's 40-year bond, which, yes, they have a 40-year bond. I didn't know they had a 40-year bond. But last night, that went up to 3.479%. And the Japan prime minister said, quote, Japan's financial situation is worse than Greece. Now, he might be saying it for some political reasons to get the United States to not tariff the crap out of them, because if your financial situation is worse than Greece, you definitely can't pay the tariff. So there might be some nuances to why he's saying that. But the credit markets and the bond markets are obviously not happy about the tax bill, the deficit spending, the Moodys downgrade, et cetera. I don't think any of that means you sell your stocks. I think that means that if you get a dip, you buy that dip, or you let the dip consolidate to get to some of these levels to take the next leg higher before we get into Q2 earnings. But it does mean we're going to have to deal with some volatility. And I think that's probably explaining the pain we're seeing currently right now in the pre-markets. But we will, continue to go through that and try to figure out what's going on. Good morning, everybody. Thank you for being here. For real, what's up? Matthew, Vibob, Zocold, Ryan, Riz, what's up? Crowd Controlled, Miss KM, June, David. Good morning. Thank you for being here. Amit, are you buying covered calls for the week? So remember, it's selling covered calls, not buying them when you're selling them. My Palantir ones expire for 140 on Friday. I think they're going to be up like 80 to 90% probably today or tomorrow. So I'm probably going to close them out early, and then maybe I'll sell the next round of calls. I'll tell you guys what strike I pick. But yeah, if you sold covered calls last week on pretty much anything, I mean, given that everything's down, Robinhood, Palantir, Nvidia, most of those will probably be up either today or tomorrow if we continue to be this red. So probably will be selling some more covered calls, but we'll have to close out the initial ones first. Justin, what's up? Andreas, Jose, good morning. Derek, what's up? Jeremiah, Walt, Samir, Byron, Jose, Craig Smith, good morning. Thank you for being here. Craig says, kick that girlfriend out of bed and get to the mic, keeping the dream alive. We're here, baby. We are live. We are live, and we are ready to get to action. I hope everyone had a good weekend. I saw The Terminator over the weekend. I caught up on a film that I should have watched in 1984, even though it was born in 1997. Elaine, good morning. And it was a good film. It was decent. I wouldn't watch it again. I'll just say that. I wasn't like, oh my God, I need to. Terminator is amazing. I know everyone's saying watch T2, so I will make my attempt to watch T2 eventually. But yeah, I enjoyed it. I more so enjoyed High School Musical 3. That's the other movie I watched over the weekend, and that was a little bit more enjoyable than The Terminator. I don't care what anyone has to say. You can say whatever you want. I don't care. I don't care what people think of me. High School Musical 3 was a great movie. It was more entertaining than Terminator. It is what it is. Also, why was the Terminator dude freaking? Why do I see ass cheeks in the first 30 seconds. I was just like, what am I watching? What's going on here? But overall, it was a decent movie, and hopefully I will see T2 pretty soon. Good morning. Good morning. Thank you, everybody, for being here. Okay, so for someone saying, where's the Boston meetup stuff? So I sent out details for the Boston meetup on May 24th over the weekend. If you didn't get the details yet because you didn't sign up here. I will send another email probably in 2 days for the new people that sign up. But we have the date, we have the time, we have the location, and very excited. Very, very excited for it. I'm going to be FSDing, by the way, to Boston. So I'm going to be FSDing from Jersey to Boston, 5-hour drive. And I'm going to try to see how many times I have to intervene and if the car can actually take me there for 5 hours. So it'll be fun to kind of document that story. But yeah, Boston is happening on Saturday, and we'll be very excited to see everybody here. All right, cool. Let's get into it. We got a bunch of different headlines. Here's the first thing I want to play right here. Moodys, we'll talk more about it, but Fed's Bostic, who's the Atlanta Fed president, he had some things to say about Moodys. He also kind of confirmed that we're not going to get a lot of rate cuts this year. I don't know if he's bluffing, but if we got to take him at his word, that's another reason the markets are not happy right now and the bond markets are exploding. Here's what the Atlanta Fed president had to say.
Downgrade by Moodys of the U.S. debt. Is that an economic issue? Is it a policy issue? Is it a financial markets issue? How do you think about an event like that?
Well, first of all, it's really good to have you here, and I'm always happy to be on the show. What I would say is it will cut across all of those things, and we'll just have to see how it plays out. You know, there's a lot of negotiation that's happening in Washington right now around the budget, around tariffs and the like, and I think we'll just have to see what happens. But with that downgrade, it will have implications for the cost of capital and a bunch of other things, and so it could have a ripple through the economy.
What about the impact on the desire, for example, of banks and foreign institutions to hold U.S. debt?
Well, there have been a lot of discussions about this. I know folks on this show have been talking about that as well. I think we have to really wait and see. Look, there's a lot of turbulence that's happening right now. The economy is in a lot of flux, policies in flux. There's a lot of uncertainty. I think we'll have to wait 3 to 6 months to start to see where this settles out. And I think that'll be an important determinant about people's willingness and appetite for investing in the U.S.
How does something like this get to the Fed's door? You don't deal with the spending or the revenue, but you have to deal with the outflow or outcome of it.
Yeah, so for us, I think the most significant way this plays out is really by us having to get an understanding about what businesses are going to do in this new environment, how households are going to respond, what our consumers going to take on higher price if that's in fact what happens,
right,
and then roll that up into an outlook for the future. What I will say is today, things are very much in flux. There's a lot of uncertainty. And what it means for me is, before I want our policy to move in any dramatic direction, we've got to let things sort out a bit. So that's kind of where I am right now.
Talk me through how you think about tariffs and the economic effects of them. There's a consumer angle to it, there's a business angle to it, and a financial markets angle to it, which a lot of people are talking about here. I don't want to know what data you're looking at, but what processes are you trying to figure out?
I think for me today, there are really like 3 things I'm trying to understand. The first is, once we see what the final regime is in terms of tariffs across the globe, how do businesses respond to that? Do they pass through all of it? Do they try to pass through some of it? Or do they take that in margin? And the second is really, how do consumers respond to whatever their business response is? So in the last episode, consumers basically took on the price and they paid it. It is unclear whether they will be able to do that today because their balance sheets are weaker than they were in the past. We don't have the same level of support. People have just lived through a high level of inflation. And so there may be greater sensitivity, which could slow down things and cause them to be much more responsive. And then the third is really, what does this mean for inflation dynamics? Are we seeing, the basic theory is tariffs are just a one-time bump and then you go back. Is that how this is going to play out? To the extent that this tariff transition happens over a longer period of time, it could induce businesses and families to change their strategies in ways that wind up being structural. If that happens, then we will have to take that on board from a policy perspective.
As you can see, Bostic is feeling pretty damn uncertain in terms of how he's thinking about tariffs, and he has a vote when it comes to rate cuts, which means he's probably feeling uncertain when it comes to rate cuts. Here's what he had to say about the probability of future rate cuts.
In my SCP, I'm leaning much more into one cut this year because I think it will
I'm leaning much towards one cut this year. And that's just not what the treasury markets want to hear right now.
take time, and then we'll sort of have to see. There are some scenarios where everybody grabs hands, they walk arm in arm, they're buddies again, and we wind up with a very different regime where tariffs are not an overarching story. And in that case, you might see the economy rebound much faster than it would otherwise. But really, we'll have to just wait and see.
So that's what we got from Bostic this morning. The takeaway was that he feels the tariff volatility is still strong enough to create uncertainties, and those uncertainties as a result create a sort of foundational paradigm that the Fed can't cut into because they're afraid of what it would look like for them to cut into high tariffs that create more inflation. There's like many counter arguments against that. We've talked about that for the past couple of weeks. There's basic things you look at like CPI, PPI showing that, hey, even if we do have tariffs, it will be offset by inflation, by deflation coming from those metrics. But still, this Fed, I don't know how they're conceptualizing it, but I think they're picking being as safe as possible over potentially preventing a recession. And it looks like the only time they're really going to aggressively cut is if we get into a recession. And it's just, if every other central bank across the world was engaging in that paradigm, I would kind of give them the benefit of the doubt. But every single other central bank, whether it's Bank of England, European Central Bank, Bank of Canada, they're cutting because they know that you don't want to cut when it's obvious to cut. Our Fed's not doing that. And this is the one thing I think that Trump is absolutely correct on. Like, it's really hard to be sitting on the sidelines with rates as high as they are off the potential fear of what tariffs are going to create versus the actual hard data that's showing that inflation is coming down. Now, going from that conversation into Moodys, here's what Bessent had to say over the weekend about the Moodys downgrade that has stocks down about 3-4% currently right now.
I think that Moody's is a lagging indicator. I think that's what everyone thinks of credit agencies. Larry Summers and I don't agree on everything, but he said that when they downgraded the U.S. in 2011. So it's a lagging indicator. And just like Sean Duffy said with our air traffic control system, we didn't get here in the past 100 days. It's the Biden administration and the spending that we have seen over the past 4 years. We inherited 6.7% deficit to GDP, the highest when we weren't in a recession, not in a war, and we are determined to bring the spending down and grow the economy. I think that Moody's is
basically Bessent saying he doesn't care. He does not care. Felix says, hey, amid conspiracy theory, do you think Trump admin pushed Moody's to downgrade in a 4D chess move to get the Fed to decrease rates? I can understand kind of the logic behind how you're assuming that. I think it's just tough, though, because the unfortunate part about the Moody's downgrade is that it is pushing bond yields up to a higher level that I don't even think Trump thought we would get to, even in the midst of all the tariff volatility. There could be an argument that, hey, maybe the Fed feels like we should be cutting rates to be able to combat that. But if the Fed didn't cut rates after the bond market was screaming on April 8th, when stocks were down and yields were up, which is like the worst combination, if the Fed didn't step in even for a second and say, hey, we're thinking of cutting, then I don't think they're going to cut here. And if anything, the Moody's downgrade only makes it worse for the Fed to cut into, because now their argument is, hey, we're still going to have more inflation by tariffs and we have a bad credit rating. So anyone who buys our debt, even if we reduce our rates, is not necessarily going to solve the structural problem. What would really be scary is if the Fed cuts rates, let's say in June, which they're not going to. It's pretty obvious they're not going to based on what Bostic said. But let's say they do and bond yields still go up. Like, there's an 8.6% chance they would cut in June. Imagine they cut in June and bond yields still go up. Then Trump has a different issue. And that issue is that people just don't like U.S. debt, which I don't really think it's necessarily true because, like, who else's debt are you going to buy? But the point is, it could get aggressive if we get a cut and we don't get the right environment to get into that cut. Regardless, one of the only things right now that's going to get yields to come down are cuts. Now, obviously, SLR ratios and things we talked about over the past couple of weeks, getting banks to be able to buy treasuries, all of that can create more of a bid and demand on treasuries in and of themselves, which can get yields to come down. But the number one thing is for rate cuts as like the easiest route to figure this out. And unfortunately, that's not happening. So the conclusion on Moody's to me is very simple. I think number one, Moody's is a credit rating agency that really should not have that much legitimacy. They downgraded us in 2011. The United States was fine. They said that mortgage-backed securities in 2008 were AAA rated, which is the highest level of bond rating you could get on a security. Obviously, we saw what happened to mortgage-backed securities. And now in 2025, coincidentally, after some of the worst 4 years of spending, as Bessent said, 6.7% GDP to spending ratio that we had in the United States. Now, after Trump's first 100 days, Moody's wants to come out and say we are downgrading the U.S. credit rating. It's just very peculiar why they're doing it right now, why they didn't do it even in 2024, 2023. We did have Fitch do it in 2023. Why did Moody's not follow them, right? Why is one credit rating agency doing it, but Moody's isn't? And what was the catalyst to get it to happen in 2025? I just don't see the reason for it. So I think if we get any sizable dip because of this, it's not really because of Moody's. It's more so because of the credit markets. And that is a dip that the institutions will buy aggressively. We got a bunch of upgrades this morning on a lot of stocks that we'll talk about. Tesla, by the way, got upgraded to 425, first 400 upgrade we've seen in about 2 months. So we'll talk about that. But I think a lot of the equity research firms are looking past this because they read so much into the tariff volatility that it led them to downgrade all of their estimates. And a lot of their clients lost a lot of money if they listened to them and sold stocks or got out of certain names. And now it's kind of like, all right, fool me once, shame on me. Or shame on you, fool me twice, shame on me. And I think a lot of people do not want to be fooled twice on leaving one of the greatest markets we have. And I say greatest market, not because of the returns, but because of the technology that is underpinning those returns. And we'll talk about Nvidia in a second, because of US debt or because of Japanese debt. Like, it just doesn't make a lot of sense. It sounds like a juicy headline in the moment for a reason to sell stocks, but it's not necessarily the reason I think people should be selling their stocks. By the way, we had the White House senior advisor this morning also said, I would not be surprised if there are more trade deals this week. We'll keep a close eye on what the Chinese have agreed to. He did say last week that when Trump comes back from the Middle East, they will be announcing the next big trade deal. Hopefully we get that this week. I think that would be really great for the markets. A lot of people are speculating that it's India. Some people are saying the India stuff is not going that well. So we're going to have to see over the next couple of days what deal that ends up being. But another trade deal as well would be really good. And I think inject more certainty into the broader markets. But we still don't have confirmation on what that deal is. All we know is that the China tariffs are paused and the UK is the first deal. By the way, Elon's going to be on Bloomberg tomorrow at 9 a.m. He's going to be speaking at the Qatar Economic Forum. So Elon will be live tomorrow on Bloomberg, and he will be speaking as well. Okay, so here's the other thing we got to talk about: Japan. What the hell is going on in Japan? So what's going on in Japan is really weird. Japan's 40-year bond, as you can see right here, is at 3.479%. Now, why is that happening? Obviously, when people sell bonds, yields go up. Why are people selling the 40-year bond in Japan? I don't think it's necessarily people are selling the 40-year bond, and that's obviously some of it. I think it's more so the BOJ, the Bank of Japan, is not stepping in to buy more, which the Bank of Japan is the highest buyer or the strongest buyer of Japanese debt in and of itself, just like our Fed is one of the highest buyers of our own treasuries. And Japan's Prime Minister Ishiba yesterday said that Japan's financial situation is worse than Greece. Now, in Greece in 2008, we had some big issues, and it had a lot to do with their currencies. You had George Soros and a lot of these guys that were involved in trying to figure out how that was playing out. But for the Japanese Prime Minister to say that, it definitely gets you thinking like, hey, what's going on right here? And I think one of the reasons he said that is because of the U.S. trade deal. So this is from Bloomberg last night. Japan's Prime Minister said Tokyo won't compromise national interests just to meet time limits in trade talks with the U.S., stressing Japan won't accept a deal that skips the 25% car tariff. He says, we will not follow other countries simply because they are moving forward. Talks continue this week as Japan pushes for a full tariff exemption, even with a 24% across-the-board levy set to return in July when the 90-day pause is now complete. So I think the Japanese president is saying that our financial situation is worse than Greece to send Trump a message of, hey, I can't acquiesce to everything that you want me to do when it comes to tariffs because I have my own issues. The structural problem in Japan that we've talked about for a long time is their population, right? They have a lot of older people that are not necessarily creating a lot of economic productivity. And that I think there was a headline 7 months ago. I believe it's still true. Japan is paying people to take Friday off and go to the clubs because they want people to have a better chance of getting married. It's not it's all federal employees, not private, but federal employees who were like get Friday off. Maybe that was going on for a couple months, and they wanted you to like go to the club and like find a mate and like have kids because, you know, people are just not having enough kids. So, I mean, there's obviously a lot of different issues in Japan from a structural perspective, but bond yields rising are also not the worst thing in the world. Now, remember, the other big thing here outside of their population is that Japan's government debt over their GDP, their debt to GDP ratio is 250%. The United States is at 122%. So Japan owes twice more than what its entire economy produces in a year in debt. I mean, that's aggressive, right? That's an issue. So this goes to my point, though. I don't think these are like existential problems with Japan. These are things that Japan will inevitably have to deal with, and hopefully tech, innovation, AI, all this stuff is going to help them navigate this stuff. But why would anyone sell a US 10-year to buy a Japanese 40-year when Japan has all of these issues and Meta, Nvidia, Amazon, Microsoft, Google, Robinhood, Palantir, like Tesla, all these companies are not in Japan. They have businesses in Japan, but they didn't originate in Japan. They're originating in America. And we have a lot of IPOs on deck that are getting ready to go public in America because America is the best country in the world when it comes to these tech startups and the ability to create true economic value, right? Like America needs to grow out of our concerns. That's what Scott Bessent said last night. He said, look, I know we have some issues, but we can grow out of it. And we do have a rising deficit crisis that is an issue. But if we grow out of it, then we can solve that issue. Japan's not growing out of it anytime soon, or at least I don't see the path for them to grow out of it, which then again begs the question, why would you sell US debt, as Moodys says, to go buy Canadian, Danish, or Australian debt when none of those countries are meaningfully going to be able to grow out of it? Here's Bessent last night talking about how he plans to get the US on the right track to grow out of their deficit spending.
There is the growth, the potential growth of the debt, but what's more important is that we grow the economy faster. So what we've seen under the past 4 years, and what we inherited, I inherited 6.7% deficit to GDP, which was the highest deficit when we were not at war, not in a recession. So we've been trying to bring down the spending, and we are going to grow the revenue side. So we are going to grow the GDP faster than the debt grows, and that will stabilize the debt to GDP, which even Secretary Yellen and I agree is the most important number. There is the growth.
So again, like, it's a tricky situation. We have a lot of deficit spending. We're going to have to find a way to grow out of it, but no other country on the planet is going to be able to grow like the United States is able to grow. Their GDP growth might be faster just because they have smaller populations and they're growing from a smaller base, but they're not going to be able to put up the multi-trillion-dollar companies that exist in the United States. So look, my take on Moodys, it's not a big deal. I wouldn't get upset about it. We're already in the pre-markets recovering slightly right here. I mean, you know, yes, Nvidia's down at 130, 178, but it went up to 136 yesterday from freaking 115, right? So like it needed some level of consolidation. This is why I continue to say it is a covered call market. I don't think you should be afraid of aggressive covered calls. I wouldn't make them super aggressive, but I also wouldn't go to like 0.10 deltas. Like you can do a 0.27, 0.29, maybe a 0.30 if you know the company very well. 0.25 is a little bit more of a safe spot, but this is not the time to be scared of covered calls. Even Amazon, right? If you had a covered call on Amazon at 205, it was at 214 yesterday. It was running away from you. Well, now it's back at 201 because the institutions need some way to get back into this market. They definitively missed the rally and they're pretty upset. And Moodys, for whatever reason, whether it was the Illuminati that paid them to put out the downgrade. I mean, it was just really weird, bro. Friday after hours, it's like, oh, wow, Moodys downgrade. Like it was just very weird how it happened. And it makes you think maybe the Toots need an excuse. And this is their excuse. I think the Toots are not going to let this go away because they know where this market is going. And the reason they know where this market is going is because they have a newfound interest in getting excited about technology because of Nvidia, which is our next topic. We're going to talk about what's going on with Nvidia. Amit, do you believe the tax bill is helping with the deficit? No, I think the tax bill is going to explode the deficit and it's not good for the deficit. However, I'm not the president. I'm not in Congress. And more likely than not, Trump is going to be able to get that bill passed through reconciliation. And it is what it is. I can't do anything about it. All I can say is that I hope the United States can grow faster than the deficit. But look, if Kamala won the presidency, she would also have things that exploded the deficit, maybe not on the tax cut side, but more on the spending side. So it's one of those things where I've come to the conclusion where this is the nature of America. Like every single administration is going to spend more than they can afford. And I had hopes that Trump was not going to do that with Doge. That's gone out the window. Obviously, Trump's going to be spending as much as he can, and Doge is not really doing anything. So the only hope I have is that we can grow out of it. And as investors, we got to take care of ourselves at the end of the day, right? We have to be invested in the companies that are going to benefit from that growth. And whatever happens to the debt situation in 50 years, we'll have to deal with it. I think the U.S. military will hopefully be strong enough to not default on our debt and not for the dollar to become a second reserve currency underneath like the yuan or the yen. But again, when you look at a comparative analysis across the rest of the world, whose currency or military is better than the United States that people trust in? No one? Okay. United States has some issues, but people are still going to use the United States. All right, show goes on. And I know it sucks to hear it like that, but I feel like that's how it's going to play out. And, unfortunately, this is just the nature of the way we're currently spending. But at least we have the biggest tech companies in the world that are innovating in the United States. Let's talk about Nvidia. Nvidia held a keynote in Taiwan yesterday. Here's some highlights on what Jensen had to say. Jose will be on in about an hour, and we'll get his thoughts. But Jensen said some pretty awesome things at this keynote.
We realized that Nvidia is not a technology company only anymore. In fact, we're an essential infrastructure company, not unlike the first industrial revolution. When people realized, GE, Westinghouse, Siemens, realized that there was a new type of technology called electricity, and new infrastructure has to be built all around the world. And these infrastructure became essential part of social infrastructure. That infrastructure is now called electricity. Years later, this is during all of our generation, we realized there was a new type of infrastructure. And this new infrastructure was very conceptual, very hard to understand. And this infrastructure called information. This information infrastructure, the first time it was described, made no sense to anybody. But we now realized it is the internet. Well, there's a new infrastructure now. This new infrastructure is built on top of the first two. And this new infrastructure is an infrastructure of intelligence. I know that right now, when we say there's an intelligence infrastructure, it makes no sense. But I promise you, in 10 years' time, you will look back and you will realize that AI has now integrated into everything. And in fact, we need AI everywhere. And every region, every industry, every country, every company, all needs AI. AI has now part of infrastructure. And this infrastructure, just like the internet, just like electricity, needs factories. And these factories are essentially what we build today. They're not data centers of the past. And these AI data centers, if you will, are improperly described. They are, in fact, AI factories. You apply energy to it, and it produces something incredibly valuable. And these things are called tokens. To the point where companies are starting to talk about how many tokens they produced last quarter and how many tokens they produced last month. Very soon, we'll be talking about how many tokens we produce every hour, just as every single factory does. And so the world has fundamentally changed.
Jensen, it was a hell of a keynote last night. Saw some of the highlights this morning. Again, we'll have Jose come on in an hour and talk a little bit more about some of the core things. But here are the 5 things that he launched, and Jose will expand more on them. Number 1, NVLink fusion technology. That's the big probably headline you're seeing across the board. It's a new silicon offering that allows integration of NVIDIA chips with non-NVIDIA chips, for example, ASICs, to build semi-custom rack scale AI infrastructure for hyperscalers, which allows chip-to-chip communication. Number 2, the NVIDIA Isaac GR00T platform. They unveiled N1, which is an open, fully customizable foundation model for humanoid robots. And there's a clip where he talks about robots we'll look at. Then they announced GB300, a new product set to launch in Q3 2025. And we still are looking for more details on that. Then they revealed the NVIDIA RTX Pro Server, a Blackwell-based server designed to deliver universal acceleration for AI, designing, engineering, and business applications. And then they talked about DGX Cloud, Lepton, and Exemplar Clouds, which is an AI platform with compute marketplace connecting thousands of developers to different GPUs across partners like CoreWeave, SoftBank, etc. That essentially the goal of that is to boost physical AI and agentic AI in and of itself. So, I mean, you did have a lot of updates from this event, and not to mention they are opening a new headquarters in Taiwan called Constellation. So that was kind of the gist of the event. Here's what Jensen had to say about humanoids. But the point is, even though NVIDIA is down right here in the pre-markets, he once again showed you that they are ushering in the next level of growth for this company. And it doesn't look like it's going to be as cyclical as most people think.
Well, as I mentioned earlier, the world has a severe shortage of labor. And the reason why humanoid robotics is so important is because it is the only form of robot that can be deployed almost anywhere brownfield. It doesn't have to be greenfield. It could fit into the world we created. It could do the task that we made for ourselves. We engineered the world for ourselves, and now we could create a robot that fit into that world to help us.
Okay, so we'll go back to this. The White House is actually live right now. I guess there's some new updates. They usually don't go live in the morning. Let's switch to the White House. Let's see what she's saying. But I think it's some updates about Trump's big, beautiful bill.
Illegal aliens who are currently improperly receiving Medicaid benefits will be kicked off the program to preserve it for hardworking American citizens who need it. President Trump and Republicans are protecting Medicaid benefits for pregnant women, children, disabled individuals, low-income seniors and families, and the most vulnerable Americans in our society. And that's what Democrats are so angry about.
All right, hold on. We got some China headlines. China issues statement on U.S. adjusting chip export controls. China says U.S. undermines consensus reached in Geneva talks. Oh, boy. That's not good. China asks the U.S. to correct wrongdoings. Okay, so China's upset because the United States undermined consensus reached in Geneva talks. Did the Geneva talks have anything to do with allowing Nvidia chips to be sold into China? I don't think they did. Where are the markets right now? Why is the press secretary live? I guess she's talking about that bill that she wants to get passed. I don't think she's talking about China. So that's like more of a political thing. It's not, I mean, it affects the markets, but it's way more political than not. Nvidia right here down 2.7%. I mean, Nvidia's not down as much as it was from before. Palantir is down a little bit. Broader markets are S&P, there you go, down a full 1.1%. I think it was down 0.9, so that's down another 0.2. Okay, so China's upset. China Commerce Ministry on U.S. statement on Huawei chips urges U.S. to stop discriminating actions towards China. Here's what's happening. I think China is upset that the U.S. is repealing the diffusion rule to sell all these chips into Qatar, the UAE, and Saudi Arabia. And they're like, hey, what about us? Right? What about us? And I would imagine that Bessent is going to inevitably get rid of those export controls as they continue to further their negotiations. But as of now, the only thing they've got in negotiations is the 90-day pause set in place in the reduction of the 145% tariffs. But that's probably not what China, currently wants to deal with. I don't know, dude. I don't think that's that big of a deal. Like, China can be upset all they want. If they're not going to increase their tariff rates, it's not going to have an impact on the market. They can be upset, and they should be upset because we're giving a lot of chips to the Middle East instead of them. So they probably want to take part in that. But I don't think that's necessarily a reason the markets have to get upset unless China insinuates, hey, we're going to take away our part of the deal that we reached in Geneva, given that you guys aren't following on export controls. But from everything I read from what happened in Geneva, there was no agreement on export controls, or at least that wasn't reported. So I don't know why China's saying you're not holding up your end of the bargain, because I don't think there was any bargain for a consensus around Nvidia chips in Geneva. At least that's not my assumption here. But that's, I guess, kind of the core thing that China's upset around. Let's go back to the White House, see what they're saying, and then we'll keep going from there.
With cutting-edge technology to secure our homeland from dangerous illegal alien invaders. This bill also advances our national security and defense interests by ensuring the United States military has the necessary resources to remain the strongest and most lethal
span of the war, which is crazy considering two nuclear powers were engaged in a proxy war. So I do admire these moves by the current president, I'll be honest. However, as of today, we are still funding both Israel's and Ukraine's wars. So can America...
Okay, so this is definitely, I don't know why they're going live this early in the morning. This is definitely more political than anything. It's not really like a market briefing about breaking news or anything. But yeah, the big news seems to be this kind of China headline. I'll try to get more updates on it and see exactly what China is trying to say and why they're so upset. But from my understanding, I don't think there's this massive agreement on Nvidia chips that was announced. Yeah, China issues statement on U.S. adjusting chip export controls. China says U.S. undermines consensus reached in Geneva, asks the U.S. to correct wrongdoings. Maybe Bessent promised them some chips and we didn't give them any chips yet, and that's why they're upset. But this plus Moodys, Q's down 1.5%. I mean, it was inevitable, right? We were winning like crazy since April 8th. Markets went up 25%. Like, you needed some headlines to kind of consolidate and probably take us back down to reality. And, maybe today we're going to get back to reality. Now, if the dip ends up getting bought today, like easily, that means this market is full on risk mode bullish. Even Bitcoin hit 107 last night, guys. Where's Bitcoin right now? Bitcoin is at 102. All right. So a little bit of a Sunday pump and dump, but still, if we see this dip getting eaten up easily, then I think that would be very bullish. If not, then I think it's normal. Like everything pumped last week. It's kind of normal for it to take a break. It would not surprise me. Palantir settles down at a 120, 115 range. It went to 133. That was great, but there was no kind of major headline on Palantir outside of carping in Saudi Arabia, which is a reason for why I think the stock should have went up, but it doesn't have to be a reason why the stock stays up. And same thing for Nvidia, right? Nvidia going from 115 to 137. That was great, but it doesn't have to stay there. It could probably consolidate, which I think is not crazy. Even Tesla going to 350. There wasn't any major headline on Tesla last week. So consolidation levels before we make the next leg up going into June, July, I think is not crazy. Here's Jensen finishing up on that humanoid future that he was talking about in Taiwan last night.
Now, the amazing thing about human robotics is not just the fact that if it worked, it could be quite versatile. It is likely the only robot that is likely to work. And the reason for that is because technology needs scale. Most of the robotic systems we've had so far are too low volume. And those low volume systems will never achieve the technology scale to get the flywheel going far enough, fast enough, so that we're willing to dedicate enough technology into it to make it better. But human or robot, it is likely to be the next multi-trillion-dollar industry. And the technology innovation is incredibly fast. And the consumption of computing and data centers, enormous. But this is one of those applications that needs 3 computers. One computer is an AI for learning. One computer is a simulation engine where the AI can learn how to be a robot in a virtual environment, and then also the deployment of it.
So a multi-trillion-dollar industry. I mean, look, it seems pretty exciting if we're able to pull that off. Again, all of those robots are going to need some type of GPUs. All of those robots are going to need software for them to act in a meaningful way. It's not bad. It's not bad to see Jensen kind of touting it. Obviously, he's talking his book because he knows that if humanoid robots succeed, that Nvidia will succeed as well. But the point is, if you don't doubt him that there's going to be some massive multi-trillion-dollar industry in the context of what robotics look like, then the Teslas of the world, the Nvidias of the world, the Amazons of the world, I mean, I think there's going to be a lot of winners in that space, which is going to be very exciting. Again, the big headline right now outside of Moodys is that the U.S. has seriously undermined consensus talks reached at Geneva based on what China is saying. No one understands exactly what those consensus talks were at Geneva that the U.S. is now undermining. China also might just be saying this to say this, right? They could just be straight up lying, and there was no consensus that was reached in regards to export controls for Nvidia chips that is being violated. So we're going to have to hear a statement from Bessent pretty damn soon. Like, I would say within the next couple hours, because Bessent was the guy negotiating with them, right? So, I mean, what did he say? What did he promise? You know, to be honest, we reached the deal so quickly. It wouldn't surprise me if Bessent was like, you know, hey, we'll give you some more Nvidia chips, right? Like, what if Bessent was like, we'll give you some more Nvidia chips? Because that would be hilarious to me if that's what he needed to get the job done. And that's how they, you know, agreed in 48 hours to come to a conclusion. And now maybe we're not giving them any chips. We're giving all of our chips to the Saudis. So, I mean, like maybe Bessent said that, but if he didn't say that, then I don't know what the heck China is necessarily that upset about. So we're going to have to see how that plays out in a bit. They're pissed out about Taiwan. Yeah, I mean, look, Jensen, again, there's a new headquarters in Taiwan. That's why he was there last night, called Constellation. And they're probably not happy that Jensen's making progress in Taiwan. Here was Jensen being asked about why he continues to work with TSMC late last night.
How much more do we have to pay? Does Nvidia have to pay for chips made in USA?
I don't know. It doesn't matter.
You got a good deal?
You know, TSMC's pricing is consistent and fair for everyone. And so, because it is consistent and fair for everyone. And so the technology necessary to build the fabs and also the 2-nanometer process and beyond is incredibly expensive and incredibly hard. And so whatever is the price, so long as it's consistent and fair, that's the price.
It's not expensive. It's worthwhile.
Do you believe in Trump?
It's very worthwhile. Yeah.
So you got Jensen straight up defending TSMC, and his argument is like, hey, these are our guys. Like we are, we can't do anything without TSM. TSM right here, 188.70. They are a $1 trillion company in Taiwan. So one of the only $1 trillion companies across the world. And, a lot of that has been because of NVIDIA's demand. Their April numbers came out. They were exceptional, growing 68% year over year. They increased their revenue guidance last quarter from 26 billion to 29 billion. Like TSM is the kind of easy way to see if NVIDIA's demand is going up or down. And obviously it's been going up. So it makes sense that NVIDIA is opening up a headquarters in Taiwan. I could also understand why China doesn't like that. And China kind of knows that, hey, if they want to do business with NVIDIA, they can't do any funny business in Taiwan. And they also understand that it makes it harder for them to do business with NVIDIA now that NVIDIA has a headquarters in Taiwan. So this is one of those things where China is stuck in a box here that's not really effective. They already agreed to reduce their tariffs on the states, which is good for us. Now the question is, what can we get them to give up? This is why NVIDIA is so important. This is why having American companies is so important, right? Because it's like, if they really want these NVIDIA chips, they either got to put up a lot of money like the Saudis did, 600 billion, Qatar 500 billion, UAE another 500 billion, or they've got to decrease their tariffs or do something that Trump's been asking for a long time, maybe open up their country to American businesses, right? But if they don't do that, they're not going to get NVIDIA chips. I think that's why NVIDIA is being used as a pawn in this kind of negotiation. And it's one of the best it's one of the best chips that Trump has in terms of gaining leverage. Because although Huawei, has some momentum, it's nothing like NVIDIA. It's nothing like NVIDIA. And I think that's the benefit for NVIDIA currently right now. Also, the other thing that happened, I think a few weeks ago, the U.S., or actually this was not even this was a couple of days ago, the U.S. has significantly tightened export controls on Huawei, issuing a worldwide restriction on the use of its Ascend series artificial intelligence chips. The U.S. asserts that these chips breach existing export regulations and present a tangible threat to U.S. national security. This could be another reason why China's upset. It might not be because they're not getting NVIDIA chips. It might be because the U.S. is tightening the export controls on Huawei chips, and that's reducing demand for Huawei across the entire world. If the U.S. does business with another country and that country has Huawei chips, the U.S. won't do business with them for whatever type of business that they're engaging in, and that could be hurting Huawei even more. That article came out 2 hours ago from the Times of Asia right here. U.S. tightens export controls targeting Huawei AI chips. That seems to be a little bit more of the issue, potentially, than even them getting access to NVIDIA. So that could be why China's upset right now. Regardless, this is NVIDIA's market. These are NVIDIA chips. They are an American company. Trump has a lot of leverage with them. And now the question is going to be in about 40 seconds when we open the markets, do we have the firepower to buy the dip? That news is many days old. Okay, well, if it's a couple days old and China's getting upset about it today, then maybe it's having some serious impacts on Huawei. We need more details, bro. We need a lot more details. This was random this morning for China to issue the statement. So we're going to need Bessent or the White House to tell us what China is so mad about. Is it about Huawei? Is it about NVIDIA? And if there's going to be actually any real world implications on tariffs going up or down because of China being upset. So I would imagine by like lunchtime, we would hopefully get somewhat of a statement. And if not, by the end of the day, to see what the administration thinks. All right, here we go. Thank you, everybody, for being here. We are starting off the week Monday, May 19th. It is now 9:30 a.m. The stock market is once again open. All right, wake your ass up. Let's get into it. Nvidia opens 132.64, down about 2.03% of the day. It's actually green from the pre-markets. It was at around 130.37, so it's up about $2. It is also up from where it ended on Friday at 8 p.m. at the close when we had the Moodys downgrade. Nvidia right here, 132. Robinhood, 60.47. That's up. That closed at 58.90 on Friday. That is green, even though it's down 2% from the lows or from the 4 p.m. close on Friday. Tesla 338, that's down about 3.31%. Rocket Lab 2472, that's down about 3.2%. But again, you got a green candle. Palantir, wow, look at that, dude. 122.70 to 125 almost instantaneously. I mean, everything is still red, but we are seeing some green candles and people stepping in to buy the dip. Google still stuck at 165. Google's I/O event will be tomorrow. I'll be streaming it tomorrow, and we'll talk about what Google has to show to prove to the market that they are an AI company. Amazon 201, that's down about 1.87%. It was at 215 last week. Meta 632, that's down 1.3. SLG 5814. Pinterest 3184. Microsoft 454. Wow, Microsoft going green. That's 52-week highs for Microsoft. So there you go. Microsoft 454.37, hitting brand new 52-week highs currently right now. AMD 115, or I should say 2025 highs, not 52-week highs, but 2025 highs for Microsoft. AMD's at 114, that's down 2%. Roblox is down 2.39%. Coinbase down 1.4%. SMCI down 2.67%. MicroStrategy did buy another 7,000 Bitcoin this morning, 396.31. That is currently slightly red. Also, there was some class action lawsuit filed against MicroStrategy. This happens all the time. I don't know if it's going to result in them having to settle for any meaningful amount of money, but there is a lawsuit against MicroStrategy around their dilution and stuff like that. I think whatever it is, it'll be some type of parking ticket and they'll move on. But they did buy 7,000 more Bitcoin for about $730 million today. UNH is 300, just below 300. Just below 300, 301, down 3.28%, or up 3.28%. It is above that 248 level that it was at before. Google right here, 165. So Google has a green candle from the pre-markets. It was at 162. Now it's at 165, still down on the day, but you do have a nice little move on Google from the pre-markets. Where's Uber? Uber, 90.58. Loop Capital came out and they said Uber is going to buy Instacart pretty soon. And they upgraded Instacart's price because of that. Instacart actually down 1.42%. I don't think Uber is going to buy Instacart. I mean, I think it makes a lot of sense. I just don't think they're going to do that. But that is one of the headlines on Instacart. That one's down about 1.34%. Walmart down 1.5%. PayPal down 1.2%. Nvidia back to 133. There she goes. Tesla 334. Robinhood 60.55. Not below that $60 range anymore. Hims got hit on Friday. I think it's recovering a little bit. Yeah, Hims only down 3.8%, 62. So Hims kind of staying in that $60 range, which is not too bad. The VIX is up by 13%. So there you go. AppLovin is basically green. I mean, it's down about 0.5%. But again, you've got these big green candles from the pre-market, 348 to 359. It's not going to look like it's green when you look at its percentage up or down. But if you look at it from the pre-markets, a lot of these stocks are going green from where they were right before 9:30. Intel right here, 2108. That's red. Again, Pinterest, that's red. Him, 6192. Baba, that's also red, down about 2%. IWM, that's down. Small caps down 1.3. Home Depot, they have earnings coming up tomorrow. That's down 1.2%. Lyft is down about 2.3. Again, Uber is down. Let's go to the semis. And if they're affected by Nvidia, all of the semis are red. All of them. TSM, down 2%. Intel, down 2%. SMCI, down 3% after being up 20% last week. ASML, down 2%. Broadcom, down 2%. Dell, down 1.2%. Lam Research, down 2%. Micron, down 2%. AMD, down 2.2%. Nvidia, down 1.7%. ARM, down 4.5%. Marvell, down 4.2%. So a lot of these names getting hit, I don't really think because of anything other than Moodys and maybe these export control headlines that came out from China, but probably not because of Nvidia's conference, which seemed to be pretty bullish across the entire board. What about Nebius? This stock is down 2.3%, but again, it's green from the pre-market. So that one's still red. Pharma is actually having a little bit of a comeback. Merck is up, AbbVie is up, Moderna is up, Pfizer is up. Hims is the only one that's down right here. J&J is up, BMY, UNH, all these guys are pretty green. Again, Trump's executive order not really affecting the actual R&D pharmaceutical companies like a Eli Lilly or a Bristol Myers Squibb, but more so affecting the PBMs like a UNH. But UNH, I don't want to say recovering, but definitely bouncing from the lows of 248 last week. Wow, Moderna's up 8%. There might be a headline on Moderna. That one's moving. China vows to take measures if U.S. insists on going its own way. Okay, so a lot of these threats are being thrown out by China right now in the headlines. Again, I think the U.S. is going to have to respond pretty soon. Bessent's going to have to issue a statement on what the hell is China talking about when they said the U.S. is not upholding their end of the bargain. Robinhood almost 61. And then does it have any real implications? Do we get back into this back and forth game of China tariffing the crap out of us if they're upset about something, about export controls, tariffs, whatever it may be? Do they increase or do they get rid of that pause they have for 90 days? I doubt they will because, again, China can't afford to continue being in a trade war. They're trying to exert some pressure right here, but we've got to figure out what exactly was talked about in Geneva that China is so upset about that the U.S. is not upholding on their end of the bargain. 124.91 on Palantir. That's down 3.5%. SoFi 13.54. That's down 2.8. Amazon again 203. Meta 632. Amazon bouncing from 201. Disney 112. Square, which had a nice rebound last week after a crappy earnings, 56.77. GameStop 27.87, and then Archer down. Wow, Archer's down 8%. Holy crap. Archer's getting nuked right here. It was up 25% last week. Getting hit pretty badly as we get into the market open. NVAX vaccine approval is moving Moderna. Okay, that actually makes a lot of sense. Novavax. Yeah, there you go. 28%. Their vaccine. Now, what did they make a vaccine for is the question. Because that's whatever they're making a vaccine for is helping Moderna right here. Okay, so that one's helping currently right now. That's up 28%. Moderna's up 8%. Where's the S&P? We were down 1%. Wow, S&P's down 0.7, dude. We recovered almost 0.4%. It was down 1.1. Now it's down 1. Now it's down 0.79. Again, there is momentum in this market. There is absolutely momentum in this market. Nvidia right here is at 133.81. That one also very close to recovering as well. 1.12% down on the day. Okay, so we're getting some movement there. Again, these China headlines are the main thing that's affecting Palantir back to 125.45. Very interesting to kind of see people step in and not really care about Moodys right here. It's a COVID-19 vaccine, by the way. They've announced that the US FDA has approved the biologic license application for a active immunization to prevent coronavirus disease 2019. I didn't know we still had COVID-19 vaccines, like, and a meaningful market for them, but I guess we do. So it's a COVID-19 vaccine that's moving Moderna, which actually is when Moderna started moving back in 2020 because they were the first ones to work on that vaccine. So that's up right here, 7.84%. Wow, Nvidia 134. Look at that. Look at that green, dude. If Nvidia hits 135, that means the market does not care about Moodys. Hoodie 61.30. Robinhood 61.30 right here. Was at 58. Now it's at 61. Is Apple getting hit? This China headline might be hurting Apple. Oof, Apple. Yep, there you go. Those China headlines are so aggressive on Apple. Apple from 212 to 205, down 2.8% right here. Apple, the one getting hit the most. U.S. White House Press Secretary Leavitt says China producers will be absorbing the cost of tariffs. I don't know if she's that correct about that, to be honest. I'm not sure. I mean, this went back over the thing on, Trump said Walmart needs to eat the tariffs over the weekend, and he got pretty upset at Walmart. And Walmart has a 2.5% operating margin. I don't necessarily know if they can eat the tariffs. So he's going to have to live with the fact that some prices will have to get more expensive for consumers. Now, granted, if we get tax cuts, then people will be able to afford higher prices because we're not going to have that many taxes, but that also means the deficit's going to explode. So there's a lot of nuance to this, but I don't think China is necessarily going to be eating all the tariffs. Unless we say, hey, China, you got to eat the tariffs in order for us to sell you these Nvidia chips. I mean, maybe that's the bargain, right? Maybe you want these Nvidia chips, you got to eat the tariffs. But I don't know if China is going to be strong-armed into a deal like that. And I would imagine they don't want to be strong-armed into something that aggressive. Palantir right here, 125.49. Rocket Lab, 24.69. Robinhood, very close to going green, 20 cents away. And then Tessie, 3.36. Now, we did get a Tesla upgrade today. It feels like forever since we got a Tesla upgrade from the street. But we did get it, and it was from Cantor Fitzgerald. Tesla reiterated at overweight with a $425 price target. He writes, we are encouraged by management's reaffirmation of the launch of the robotaxi in Texas in June and the introduction of lower price vehicles in H1 2025, which could be timely given the likely negative impact of vehicle prices due to tariff implementation. We expect the initial price to be $30,000 inclusive of the tax credit. We are also encouraged by Musk's comments on the Q1 call that his time at Doge will be significantly reduced. Separately, we continue to believe that Tesla is better positioned to mitigate the impact from tariffs with global manufacturing facilities in US, Germany, and China. Overall, we continue to see future revenue upside from FSD, robotaxi, and energy storage and deployment. Optimus bots to be fundamental to Tesla's thesis over time. So pretty easy bull case. FSD, bots, less Doge, more robotics, more energy. And that's what's got the market excited about Tessie. Tesla's still down about 3.7% currently right now. I don't think Trump is live today. Is he live at 10 a.m.? I don't think he's going to be live today. I might be wrong. If he is live, we'll go to it, but I don't think he's live today. He just came back from the Middle East, I think 2 days ago. So maybe he takes a day until he goes live again, but I don't think it's today. Robin at 61.57, Pouncer 125, Rocket Lab 24.67, and then Nvidia $1 away from breaking even on the day. He's talking to Putin at 10 a.m. You're right. He is. He did tweet about that. Yes. He is talking. Oh, we're getting a Kremlin update right now. Meeting between Putin and Trump is not being prepared at the moment. That came out 5 minutes ago. Hold on. That's weird because Trump on Truth Social over the weekend said he's talking to Putin at 10 a.m. today. Trump just tweeted about Beyonce. Okay, that's fine. He said Beyonce got paid too much money by Kamala Harris to perform. All right, cool. So the Kremlin is saying that the meeting is not happening. The Kremlin is saying the meeting is not happening right now. Kremlin says no plans for a meeting. Huh. That's not good. I mean, like any level of a call to begin negotiations on ending the Ukraine-Russia stuff would be positive. Yeah, so as of right now, the update I'm looking at is Kremlin says there is no preparation for any meeting between the two. Okay, so that's one thing we'll keep an update on. Also, we got another update right here. China's state banks will cut deposit interest rates on Tuesday. All right, so you got China engaging in some more stimulus on Tuesday, it looks like, in order to help their economy. Alibaba right here, still down about 2.4% currently right now. FXI. By the way, all the super investors like the David Teppers of the world, they did trim their China. Even Michael Burry, who's been the most bullish China over the past 5 years, he sold out of everything. So you did have a bit more of a rebalance right here. And it's not like they all bought big tech, even though a lot of them did in the United States, but they definitely trimmed the Babas, the Pinduoduos, the JDs, the Baidus of the world. So maybe some of them feeling a little bit uneasy about everything going on in China. Robin at 61.47, Palantir 124.77, Nvidia 134.39. Again, $1 away from breaking even right now. Does he have any single trade deals finalized? The only trade deal we have legitimately finalized is the UK. Everything else is up in the air, and hopefully we're not waiting forever for that next deal. But that is, the UK one is the only one that we really have actually announced. Nebis right here. Is this one pumping? This one is green. There she goes. She goes green. It would not surprise me if a lot of these names go green here today. Amit, when is Grab buying go to? Hopefully by the end of Q2. Again, that's not confirmed if they're even going to be buying them. Grab right here is red because if the market goes red, Grab goes red. But Grab has been holding above 5, which is nice to see. Maybe we're done with the 490s that we were stuck in for about 3 months. But by the end of Q2, early Q3 is the timeline that I'm looking at. But again, we don't know if it's actually going to happen or not. It was funny, though. They asked them the other day to give a statement, and GoTo was like, we have received multiple offers from multiple interested partners, but we cannot confirm or deny anything. I was like, okay, this is happening, bro. This is that, they would have just said, no, shut up. We're not having any deal. But they said, we have received offers, but we cannot confirm. It's like they gave such a politically correct answer that to me, it's almost obvious that it's happening. We just got to wait until it actually happens. And hopefully it does play out. MicroStrategy going green. MicroStrategy, there she goes, 401.74. Sailor's probably diluting a little bit to buy some more Bitcoin, but the market does not care. MicroStrategy is green. And then Microsoft as well. Wow, look at that. 458. Microsoft is the only Mag 7 that's really pumping and is fully green on the day. Microsoft doesn't really go up even 1 or 2% unless there's a catalyst. Last catalyst was earnings, but it's actually up 1% right now. So that's exciting. The thing about MicroStrategy or Microsoft was they have a 3% layoff. I know you guys saw that headline. That 3% layoff, apparently numerous sources outside of Microsoft have confirmed that is an AI-related layoff, aka it's not just middle management that got cut. It's, hey, 30% of their code is being written by AI and they didn't need some junior level engineers making $250,000 at Microsoft that can't code better than a ChatGPT. So it is one of those things that makes you think if Microsoft wants to increase their earnings per share, they need to increase their margins. The way to increase their margins is to get rid of some costs. And if you don't need this engineer because they suck compared to AI, I mean, that's an expensive salary you can get rid of and just have it automated via AI. So that is the future we're headed into. It would not surprise me if the Metas and the Googles followed suit. Granted, this is a very small version of that with a 3% layoff. If it ends up becoming a lot more than that in the coming years, then we're going to really see how big AI is in terms of taking jobs. But Microsoft right here up about 1% on the day. CoreWeave as well, dude. The market loves this stock. CoreWeave is about to go green. It was up 20% last week. The market just loves this GPU reselling business because now with the Saudis stepping in and all the investments that were confirmed last week, I think it just renewed the interest into CoreWeave because there's just so much demand for data centers. And as a result, the market is getting excited. Did you see the UK policy news on assigning BNPL firms as banks? I did not see that. I don't know if that has that much of an impact on BNPL firms like a Klarna, but making them a bank would be kind of weird. I don't know why they would need to be a bank. By the way, speaking of BNPL, Klarna, they've said they hit 100 million users. They posted a $92 million loss due to IPO costs. And it looks like they're getting ready to go public. Revenue rose 15% year over year to $701 million, with U.S. sales up 33%. The CEO says AI is boosting efficiency and revenue per employee is on track to hit $1 million per employee with 100 million users worldwide. So even if the UK wants to clarify some of these buy now, pay later companies as banks, which again, I think is kind of weird because they're not really banks. Regardless, it looks like Klarna is getting ready to go public. CoreWeave just went green right there. And the BNPL market seems to be pretty ecstatic in terms of its momentum and aggression. By the way, Klarna was one of the first companies that got rid of a lot of their call centers and replaced them with AI. So you have a ton of these new startups saying, hey, if we go public, Zim, by the way, Zim shipping up 10.4%. They beat on the top and bottom on their earnings. You have a bunch of these companies saying, if we go public, we might as well give the street a story to be excited about. And one of the most exciting stories for a new company going public is that we don't have as many employees because a lot of the stuff is being automated via AI, which is bullish Nvidia. Nvidia 50 cents away from going green on the day after the Moodys downgrade. This would be exceptional to see the market be this excited about Nvidia that they ignore some of this macro stuff and they continue to buy. So we are seeing some pretty good momentum right here. Speaking on Nvidia, let's get one of my favorite analysts in the semiconductor world to tell me what happened last night in Taiwan. Jose, good morning. How are you?
What's going on, man? Good morning. Good morning. Is my mic check? Everything good?
Take the gain down just a little bit.
A little bit. I'll just put the mic a little bit further from me real quick.
Yeah, that works.
If that ends up helping. But yeah, I mean, yesterday, this company continues to surprise me, man. I didn't think I can get surprised by Nvidia, but the recent events, I mean, GTC, we saw some pretty cool things. And for those that are not familiar, yesterday, Jensen Huang was at a Computex event in Taiwan, which is this massive kind of tech show in the Taiwan space. And obviously with the AI market, everybody's curious of what is to be announced. Nvidia, in my opinion, announced two pretty cool solutions. The first thing was they announced kind of like AI servers for the enterprise market, calling it RTX Pro. I think this one is a little bit quiet. Not many people are talking about it, but I do believe it opens up a huge market for the enterprise space, the IT space. And this could be a nice growth as AI is being adopted by other places outside of just your major cloud server providers. The second one, and I think this is huge. One of the biggest bearish thesis for Nvidia was the big tech companies were developing their own AI chips, right? You have kind of Google creating their own TPUs. You have Microsoft, Amazon, everybody creating their own TPUs or AI chip. And
that was actually a pretty big bear case last year, right? Towards the end of the year.
Yep, exactly. And when somebody else designs their own product, Nvidia doesn't get any money out of it. But Nvidia has so many different chips. It's not just a GPU. It has so many different components that now it's allowing the license of any type of component. So let's say you are a Google and you want to continue to build your own TPU, but you like NVIDIA's kind of networking connectivity with their NVLink switch, or you might like NVIDIA's kind of CPU with the Grace or Vera. You can now license NVIDIA's products, still use your own TPUs, so you can still use your own AI chip, but you can license some of the IP and create like a super massive computer with a mix and match. So now it's in a world where no longer is it only you have to go with NVIDIA or you have to go with your own thing. Now you have this scenario where you can go with NVIDIA's products, you can go with your own thing, or you can go with both your thing and NVIDIA's thing together. So how did NVIDIA create a new product to allow this, or how are they facilitating this? No, I mean, most of these connectivity stuff are they end up working with like partners. I'm not sure if you're familiar with companies like Marvell. Marvell is a company that helps kind of these AI chip players make and design the chips. So they find like these third party players that get the license, and then those other players kind of work with Amazon, work with Microsoft to connect these solutions via whatever type of engineering needs to be done. So it's a strong licensing. I think this is insane. And again, the big bear case, like you mentioned last year, was NVIDIA's competition. But I think this is now, I think the big bear case wasn't that for NVIDIA, but it was, when was NVIDIA going to enter this market? When was NVIDIA going to enter the ASIC market? And NVIDIA just showcased that, hey, look, now it's time for me to enter this space, and it's time for me to get even more wallet from what these data center players are spending. So I think that's it. I was up till 1 o'clock. I ended up doing a video last night just because I do believe this is massive for NVIDIA. And it really, really did shock me a lot.
And what you're talking about is the NVLink Fusion product, basically.
Yeah, so it's called NVLink Fusion, but so you can use a lot of different NVIDIA's IP. They have the NVLink. They have obviously their Blackwell or AI GPUs. They have their CPUs. So in theory, let's say you are a company that does really good at CPU building. You can use your own CPU. You don't need to use NVIDIA's Grace or Vera CPU, but you can use NVIDIA's other chips and other IP to make this supercomputer work for you really, really well. So it opens up a huge market for them, in my opinion. And I think, again, I don't think the market is grasping how big this is. I think this in a year or two is what takes NVIDIA to some crazy levels.
And like from a layman's perspective, if every hyperscaler doesn't necessarily have to leave their own technology but can license the NV Fusion link to continue to expand AI workloads, that is just more demand for NVIDIA without commoditizing or re-architecting what NVIDIA's chip sales would look like, because they still get to sell to the hyperscalers without the hyperscalers leaving their own TPUs.
Yeah, exactly. So that's the big thing, right? Because Google, for example, they developed 10 years of their TPU. So for them kind of saying, you know what, we should leave our TPU behind, it's already, they can't do that. I mean, they've been doing it for 10 years straight, and it's very hard for management to even think of the idea of maybe stop making TPUs. But now with this, it's like, hey, look, we can continue to make TPUs. We can continue to do that. And NVIDIA's like, sure, you can do that, but you can license our stuff to make it even better. So it's like, I don't think this is, I think NVIDIA is a net gainer. They're not going to lose any sales from their core products, but it is going to allow these other other players that were developing their own AI chips that weren't giving any money to NVIDIA to go back to NVIDIA somehow and start giving them more money again. So I think you're going to see more of these cloud server providers becoming even a bigger customer of NVIDIA. There weren't any announcements because it does take a few years to kind of get these chips to be designed. But I do believe Jensen did mention Google and TPU, nothing confirmed, but I do believe that's going to be one of the few players. We saw Marvell and AI Labs. They're the ones that help and Amazon built the Trainium and Inferentia, so maybe we might see something like that with Amazon as well in the future. So I believe there's a lot of opportunity here and a lot of great excitement for the stock market, especially for NVIDIA.
Now, they also announced GB300, right?
Yeah, so GB300, we already knew that. They just kind of confirmed Q3 is going to, it's expected to be released Q3, and that's pretty much it. It's something we were already expecting. Luckily, there was no hiccups at the moment. So I think that's what the market was also looking for, some validation that the supply chain was still pretty strong. And I think what we heard from yesterday, the supply chain is still is still pretty straightforward for NVIDIA.
Okay, so they reaffirmed that they have products coming out. They unveiled the NVLink Fusion technology. The next biggest thing here yesterday was humanoids and Groot. So can you speak to a little bit about how big Jensen thinks this humanoid platform is going to be?
Yeah, so I mean, the robotics market, they did announce some new open source models. Jensen does believe this is going to be the next $1 trillion market in the future in terms of the robotic space. Unfortunately, we don't have a breakdown yet of what it means for humanoids and maybe kind of like industrial robots, but NVIDIA provides a lot of solutions. There wasn't any core product that they announced about it. It was just more of just a general understanding of the market, and Jensen is pretty much bullish for the robotic space. And they, again, a lot of kind of updates to maybe their Groot and some of their other chips in the robotics market, but I don't think it's anything that was mind-blowing, in my opinion. It was just more confirmation that that market is still something that NVIDIA expects to be huge in the future.
So the takeaway, Jose, is I would imagine you're not that big of a macro guy, but you don't really care about Moody's. You think?
No, Moodys. I don't know, man. I could care less. But
well, which is the right way. You're seeing all this technology being introduced at 1 a.m. and you're like, how can anyone not be bullish about it?
yeah, I mean, how can that? Yeah, I mean, and it's all luckily coming out of U.S. based companies. This great technology and innovation. So, I mean, if I'm always going to be bullish on U.S. tech, I'm always going to be bullish on the U.S. and that's it.
I love it. Okay, Jose, last question for you real quick, guys. Jose's newsletter, What the Chip Happened. I'm putting that in the chat. That is his semiconductor newsletter. You can check out and subscribe to it right here. And his Twitter in the description as well. Jose, a new headquarters in Taiwan. Why is Jensen doing that? And is that a really good thing for Taiwan?
That's one it was one of the, I want to say, I have no answer to that one right now. That was one that got me stumped yesterday. It was the last announcement that he made. My question, it brought a lot of questions, obviously, with the current administration and the tensions between China and Taiwan. I wonder if there's something behind there happening. So this to me is still an unknown. I mean, the main reason he says for the expansion is Nvidia is just growing so quickly. And that's AJ, right? AJ is kind of, it's one of the thought and theories that chess moves so China doesn't invade, and Nvidia becomes kind of like this invisible wall for the protection of Taiwan.
It's kind of smart. It's pretty smart.
I mean, Nvidia is now becoming Nvidia and TSMC are pretty much two of the most important companies out right now. And I mean, I wonder if that's the case. Jensen pretty much mentioned that it's mainly to have great partnerships with his Taiwanese partners, and that the company is growing so quickly, and they do have a lot of talent out of here at Taiwan. So if you have a lot of your suppliers, right, your AI servers, you have TSMC here in Taiwan, it makes the most sense for you to have some form of headquarters in that base, so you're able to interact with all the suppliers pretty quickly without having to fly back and forth, without having to do all these types of meetings. So in theory, it makes sense on the supply chain, but I wonder if there's more behind it. And this is the one that still has me a little stumped. So something I still got to think a little bit more about.
All right. I love it. Jose, thank you for your quick thoughts. Whatthechiphappened.com. Jose's Twitter in the chat. We'll see you later this week.
All right. Take care, man. Thank you. Appreciate it.
Take care. Have a good one. Yeah, folks. I mean, the headquarters in Taiwan definitely feels like it's a little bit more of a chess move than anything. And who knows, maybe when he was working with, maybe Trump repealed the AI diffusion law to allow Nvidia to sell millions of chips into the Middle East in order for Jensen, in coordination with Jensen, to be able to open up a headquarters in Taiwan to kind of set up, as Jose says, this invisible wall that would make it hard for China to invade. I mean, there might be some stuff going on in the background that's causing that to happen. But regardless, Nvidia, I mean, dude, a hell of a performance today. Robinhood goes green 62. Robinhood is the most bullish of bullish stocks when it comes to a bull market, right? It's literally a proxy on if the market's bullish or not. And so the fact that that's going green is kind of the market saying, we really don't care about Moody's. Everything else still slightly red, but it's not as red as it was back on after hours on Friday. That's when, things just took a real big dump immediately. And that really did feel like algos coming in and just reacting to the Moody's news. Everything else kind of going green. CoreWeave up about 1.2%. You got Delos up a little bit. Iran Energy is up a little bit. Cisco basically flat on the day. Nvidia again trying to go green. It's about $1 away. Let's see if it can get there. And then Palantir 126. I know it's down from 130, but still, Palantir holding on to these levels is not bad at all, based on what we're seeing. So the big issue right now is this Kremlin report that says Trump is not meeting with Putin. Kremlin also said, so this is from Russian state media, there will be a painstaking long work ahead on finishing or on resolving the Ukraine conflict. But that doesn't mean they're meeting with Putin. But then the White House just said there will be a readout after the Trump-Putin call. So that's weird, because you have Russian state media saying the meeting between Putin and Trump is not being prepared at the moment. And then you have the White House saying there will be a readout after the Trump-Putin call, aka there will be some form of a transcript of what they talked about. So I guess we're just going to have to wait on details to see when we officially get that call, if we don't get that call. That will have implications on the market. S&P 591. Wow, dude. Back to 590 on the S&P. Are you kidding me? Down 0.5%. So resilient market, folks. It's a resilient market. absolutely a resilient market. Where's UNH? UNH 305. The CEO bought $25 million of UNH stock. I mean, if that's not a reason to buy UNH, I don't know what it is. Now, I'm not buying it because I just don't want to own it. But like, if you wanted a dip buy, you got the CEO saying that he's confident to the tune of 25 million. That's not like $1 million, $2 million. That's 25 million. Like, the CEO is obviously putting his hat in the ring and saying we're undervalued here. And if you bought anywhere below 270, I mean, you must be loving it right now. But the question is going to be, can they escape any of the crappy headlines that a lot of people are still worried about? UNH still down from $650 at 304. So if you're buying it here, you're kind of chasing it, but you're also buying it not during max pain, and you're assuming the CEO buying it is enough of a tailwind to get this thing to go higher. But yeah, if you bought the dip last week, you should be doing very well. 304.64 right here on United Health. That's up 4.3%. And then the Qs were down 1.5 in the pre-markets. Qs are barely down 0.5 right now. It is a hell of a market, bro. Moodys couldn't take it down. This random China headline in the morning about being upset at the United States, that couldn't take it down. And then any of these macro concerns around the Japanese 40-year bond, which are definitely concerning, that's not enough to take these markets down as well. By the way, the White House just came out and said, we will call Zelensky once the Putin call concludes. So it looks like the Putin call is happening. The White House is saying right now, Trump will call Zelensky when Putin call concludes, and we will hear from Trump or the White House after the call, aka Trump might go live or they might put out a press release about it. Maybe at around 10:30, we'll get some more details on that. Tesla right here, trying to get back to 340, and then Nvidia at 134. Currently right now, we got Tom Lee on CNBC. Let's see what he has to say about these markets.
Atlanta Fed President Raphael Bostic weighed in on the downgrade this morning with our Steve Leisman. Here's what he said.
With that downgrade, it will have implications for the cost of capital and a bunch of other things. And so it could have a ripple through the economy.
Today's pullback comes after a standout week for the bulls, of course, which saw the S&P jump more than 5%. Joining us here at Post 9 is Tom Lee, Fundstrat Global Advisors Head of Research and Fundstrat Capital CIO. Happy Monday, Tom. Good to see you in.
Yeah, happy Monday.
You really haven't been unnerved by anything since Friday night, have you?
No. I don't know if there's much signal in the downgrade Friday, because I think the first AAA downgrade was signal from 2011. I don't think Moodys had any information that we didn't have on Friday afternoon. So I think markets should realize the bond market largely priced in the fact that the U.S. is really not AAA anymore. So I'd be viewing this as a buying opportunity.
That said, you're not discounting the notion that the vigilantes have been reawakened a bit?
You know, I think everyone should be aware the U.S. has an unsustainable path for debt, but I think the real signal will be when an auction fails. That happened a few years ago, and then we realized that was the time to really pay attention to the fact that we have debt sustainability issues. But I think a downgrade itself, I don't think it makes this much signal.
So we reclaim the 200-day. Is that a clear path to a new high, as some of the trading desks suggested this morning?
Yeah, in fact, I think today will be an interesting test. I'm assuming today's pullback's going to be really shallow, might even close positive, because most investors rage sold at the bottom in April, and then they doubted.
I hadn't heard that.
Yeah,
that's a good one. Is that your own, or have you heard that other places?
I've heard that. Yeah,
rage sold.
Yeah.
Sorry, go ahead.
And so as the markets climb, a lot of people sort of doubted, thought it was a rally that would fail, and so I think there's $7 trillion cash on the sidelines, enormous skepticism from our institutional clients, and a lot of folks sort of bet outside the U.S. So I think there's going to be a lot of chasing into year end.
Although, a lot of shorts have been covered already, though. A lot of the hedge fund guys who actually got it wrong and rage sold, to your point, are in a very different position right now in terms of positioning.
Yes. No, and there's a difference between being short and versus having positive beta to risk assets. So I think most people might be flat on their books. But if the market is above its 200-day, showing this sort of impulsive buying, and you're flat, that means you're underinvested.
How are you evaluating potential changes in tax policy? Obviously, the market has been very reactive to any headlines on tariffs. What about this one?
Yeah, in fact, I think as we start to think about 2026, and it makes sense because we're in the mid-year, there is not only tax policy that can be a tailwind, it looks like it's going to be, but it's deregulation.
Sure.
I mean, several published pieces show that regulatory cost for U.S. companies is over $2 trillion, maybe as much as $3 trillion. It's a bigger deal than the tax cuts itself.
Yeah, obviously we've been waiting for some time about the regulation. So in this environment, the ever bullish Tom Lee, what are you looking at when it comes specifically to the Magnificent Seven? We watch those so carefully, but the Nasdaq, of course, under pressure here today.
We think the Mag 7 is going to lead into year end because it's a group that fell first. It was widely owned, but it really got washed out. I think Tesla was a really good sort of case study. So I think the Mag 7 is going to reclaim its old highs. That's, of course, why the S&P should regain its old highs and of course, actually move above that before year end.
What about financials? That's obviously an area that so many people were looking to early on. Is that still on your radar?
Yeah, financials are important. You need the banks to rally. They have been. You know, if I was going to make a case for multiples expanding, financials is one place because not only did they prove themselves actually pretty resilient during Fed hikes and during this turmoil, but they're kind of more tech-intensive companies with better credit profiles. So I think multiples should go up.
If we do revisit the highs, what needs to happen to push past that? I mean, how firm of resistance will it be?
Well, I think investors have to look past tariffs because if we're only trading tariff headlines, the markets are going to be range bound. But again, as I look at 2026, I'm looking at companies that are battle tested. They survived the tariff headlines. There might be freer trade. That's an upside to earnings.
Freer trade than we thought.
Yes, and we thought, yes.
But the earnings estimates have come down, have they not?
Yeah, but they're going to flex in both directions, meaning I think if we have deregulation, possible improved ability to export, you know, tax cuts, that actually all supports higher earnings. But I also think the multiple for the S&P should be going up because, again, we've taken away a black swan event. I mean, we did, you know, the February to April period was a black swan for stocks.
Do you think the downgrade hurts the push for tax cuts?
I think it's going to have almost no effect.
No effect?
Yeah, because at the end of the day, the bond market prices what they think the rating should be.
I don't mean from the market standpoint. I mean from the political optics standpoint.
Yeah, it might, but you know, at the end of the day, the U.S. really wasn't AAA anymore because it was only 1 out of 3, so it's like not even a split rating AAA.
So, Tom, is there anything out there? I mean, and to be fair, you've been bullish throughout.
Nvidia 30 cents away from 135, folks. This market is just being resilient. The S&P 500 is basically barely down 0.25%. It was down 1.1 30 minutes ago. So that is a basically 0.8% reversal in the past 30 minutes, even after the Moodys downgrade. This market does not care.
You were right during this period when a lot of others sort of, whether they rage sold or just got upset in general. But what, if anything, is top of mind for you in terms of concern?
Well, I think the most important is the consumer has to stay healthy because right now we're seeing this huge divergence, right? Like the UMich survey show banana level inflation expectations, but the realized is low. If the consumer gets super cautious and retraces, then we have a recession. So I think it does come into consumers have to stay confident and keep their jobs.
And so you're a believer in the data versus the sentiment?
Yeah, at the moment, this divergence between inflation and realized is actually the largest I think ever recorded for UMich. And so I would say as long as inflation doesn't explode, then the consumer has marginally a chance to become even more positive.
Wow.
Yeah, a lot of your former colleagues at JPM think that the hard data will catch up to the survey work.
Yes. And I'm paying attention because, of course, JP Morgan, they do a lot of homework and they've got credit card data. So we do have to watch it.
Sure.
So we just have to hope for the best.
Tom,
Always.
good to see you. Thanks.
He's always glass half full, right? Well, we're just over 30.
All right, there you go. Tom Lee sounding like Mr. Tom Lee again. You can tell there's a little bit more veracity in his voice, and he's just excited to be there. He's not apologizing for Trump violating the core tenets of capitalism like he was a month ago. So what did Tom Lee just say right there as a summary? You've got him saying the bond market already pricing what Moodys said on Friday. The real signal for a credit crisis is if a bond auction fails. We haven't seen that yet. He said, our institutional clients are still skeptical. We think there will be a significant chasing of the rally into the year end. He says, I think the Mag 7 will hit their all-time highs and are still undervalued. And then he said the UMich consumer sentiment survey showed a massive divergence between reality and expectations. If the hard data doesn't catch up to the surveys, the consumer will continue to remain strong. Now, obviously, we've got to hope that the hard data does not catch up to the surveys because that would be bad, right? If inflation expectations actually end up becoming 7%, like what some people think. But if that's impractical and that's not going to happen, then I think we're going to get a lot of momentum to the upside, which is basically what Tom Lee's saying. Now, one thing that he's saying that I think we can't or we should be underscoring even more, and we can't forget about, is that Tom Lee has a lot of institutional clients. And one of the things I remember back in 2023, or 2024, which kept me bullish as well, is that he would constantly go on these podcasts and say, dude, I'm talking to my institutional clients and they keep saying they don't trust this rally. And that kept making him want to trust this rally. Hood right there, 63. There you go. Hoodie up 2%. Nvidia breaking 135. There she goes. Just 20 cents away from going green, but what a recovery. Palantir back to 127, Rocket Lab back to 25. But when the institutional guys are still skeptical as we go higher, it means there's a wall of worry that we can keep climbing. And it means there's a nice contra signal against what the biggest money in the world doesn't want to do, which ends up leading to more chasing, which is what he talked about, which could lead to even new all-time highs. So I think it's actually really good that he's saying that his largest clients are still a bit skeptical, because you kind of need them to be skeptical in order for there to be buyers when Nvidia gets to 150. And so if that ends up being the case and they buy it, at 150 versus 135, then that's where we get a lot of momentum. Nvidia 3 cents away from going green. Just incredible, dude. Market absolutely could not care about Moodys at all. Absolutely could not care about Moodys, especially after Nvidia announced everything they announced yesterday. I mean, I agree with Jose. The market's probably not understanding the implications of it yet, but it just means that this whole trajectory of a cyclical growth cycle for AI seems to be not as aggressive as what people thought. Robinhood 63, Tessie 340, got SoFi 1382, Rocket Lab 35 or 25, and then Palantir almost back to 127, which is not too bad. QBTS D-Wave, that one's getting some love. That's up 5%. Jensen, there were some rumors last night that Nvidia is investing in a quantum startup. So that could also be pumping the entire quantum space. That's probably the reason quantum's up. IONQ is down a little bit, and then Rigetti, they are up a little bit. But QBTS is the main one right here, up 5% D-Wave. So it looks like Jensen's taking quantum a little bit more serious as well. Yeah, PSI Quantum. Thank you, Wong. PSI Quantum, that is the name of the company they may be investing in. Cool. Not bad. Not bad, dude. For everyone who voted on the polls last week saying, do you trust this green? I mean, again, if we simply recap why you would trust this green, we got more trade deals coming, hopefully. You've got earnings growth that is strong. You got a consumer that's being resilient, and we'll see in the data from Walmart and Home Depot and all these guys on how resilient the consumer is. You've got oil costs that are coming down, which is great for everybody. You've got inflation, CPI and PPI, the lowest since 2020. That's great for everybody. You got the Saudis pumping in trillions of dollars of investments. That hasn't been confirmed yet. Like, it's a commitment over the next decade, but if we start seeing the implementation of that commitment, we are going to see momentum in a lot of these tech companies. And then you have one of the greatest AI revolutions that's happening that we all forgot about during the tariff volatility, but it's still kind of happening. It's not going anywhere. And if that's the case, we might continue to see some greater market momentum. I mean, dude, everyone calls Tom Lee a permabull and says, oh, he's just always bullish, but like that's how the markets are. Like, outside of some events that are bad, like a 2008 and 1987, yeah, like the markets tend to go up because the world has to grow. And like, growth is the name of the game, especially in the United States. Like, we need further growth. Companies have to be productive. We're getting even more productive with new technologies, and innovation leads to deflation. So yeah, it kind of makes sense to always be a permabull. It doesn't mean you have to be bullish literally at every moment. And back in April, he turned a bit bearish, right? Tom Lee started apologizing for being wrong about this rally based on not understanding what or how aggressive Trump was going to be. Apple right here down about 2% on the tariffs. But still, when things are ready to go back up and to the right because everything is lining up, then it makes sense to not necessarily be super bearish at that moment. And again, if you're going to be super bearish, you got to pull a Michael Burry, right? You've got to be analyzing something that's going to break in the system, that's going to create this epic crash, yada, yada. People think that's Japan right now. It's like, I like mortgage-backed securities were a once-in-a-lifetime type of thing that really broke the system. And that's why Burry gets all the credit. But to say that you're the genius who's figured out what that thing is, and you know it, and then you're putting your money at where your mouth is with credit default swaps or something to be able to capitalize off that. Like, we just haven't seen that since 2008. We literally have not seen something that aggressive since 2008 because thankfully the system just hasn't broke. since 2008 as aggressively. We've had some hiccups, but it's just not been that bad. And that's mainly because companies have been able to continue growing. Nvidia goes green. Nvidia goes green. 135.54. Nvidia officially goes green. Burry did buy millions of shorting Nvidia. However, he could have bought those in February and could have exited in March. So all of his puts, we're not going to know if he's still in them or not until Q2. And by then he might have had a new position. So the only thing we know is that he did go short Nvidia at one point. The question if he continued to stay short up until the end of March, which wouldn't have been the worst situation. It would have been bad now if he's continued to be short, but he could have effectively timed it in April. JC, thank you for the $10 super chat. Admit this is one of the best channels I watch. Thank you for the hard work and happy birthday. JC, I appreciate you. Thank you for being here. It is not my birthday, although everyone says it's my birthday every single day. I'm like 150 years old at this point. But thank you for being here. Thank you for being part of the channel. Thank you for the super chat. And glad you are enjoying every single day. Nvidia, 20 cents away from 136, folks. 20 cents away from 136. That is really nice to see right here. If we break above 136, this market absolutely does not care. Tesla right here at 342. Someone said Rocket Lab $35 calls just spiked in volume. What date are you seeing those Rocket Lab? Oh, for December? Let me check. December Rocket Lab. Let me see. $35 calls, huh? December 19th, 35. Yeah, look at that, dude. They did just spike in. Holy crap, dude. It's like 4,000 of them that were traded just now. All right, there you go. There you go. You do see some momentum on that $35 call on the lab of rockets going into December right now. Rocket Lab 25.23. That's down about 1.3%. Nvidia 135.80. Again, 20 cents away from 136. Let me check resistance for 136 and then Palantir back to 127. I understand Palantir's multiple is aggressive, but I think one of the reasons Palantir is maintaining this multiple is because of Nvidia is talking about a multi-trillion-dollar AI market that's just getting started. Kind of feels like Palantir will participate regardless of its multiple. And that's why the street is excited. 136 on Nvidia currently is 137,000 shares. 137,000 shares. Did the S&P just go green? S&P very close to going green, folks. Wow. Literally, the Moodys downgrade was a buy the dip. And it was a buy the dip over 24 hours. Less than 24 hours. Because you couldn't buy on Saturday. So you could buy on Sunday night on the overnight markets and then Friday from 4 to 8 p.m. You could have bought the dip. Less than 24 hours. And then today in the pre-markets, you could have bought some of it. But we're green, or we're very close to going green. 594 almost on the S&P. You can check resistance using Robinhood. That's what I use. It's called NASDAQ Level 2 book orders. You can check it on Webull as well. If you just type that in on Google, you can get a bunch of websites that show it. But on Robinhood, if you click on the yellow arrow near the stock price, that's where it shows you the book order volumes to check share resistance. Wow, dude. I'm not saying it's a recovery, but man, it's almost like the Moodys thing never happened. We were literally at 594.18 on May 16th. Everyone was happy on Friday. Then you can see right here that stupid Moodys thing comes out after hours. Me, Steve, and Matt were trying to talk about whatever we were talking about. And then the whole chat started exploding about Moodys. I was like, what is going on? What is this thing? And then, we had a downgrade. Everything fell after hours. And now making our way right back up as if Moodys doesn't really matter. Nvidia 135.50 and then Tesla right here, 342. Currently right now, SoFi is 1381. SoFi still down on the day. Again, for SoFi, I think they need rate cuts. I think that's going to be the biggest thing that helps get the market more excited about SoFi. Without rate cuts, they're going to need some tech platform growth. And, Noto said that's coming closer to 2026. So I think rate cuts is the big name of the game. If you're wheeling SoFi, it's one of the best stocks to wheel. Like if you're selling calls against it and you need to stay in a range, it's not really breaking out. And if you're selling puts on it, it's not really tanking. So from a wheeling perspective, SoFi is kind of one of the best names in the market in terms of just benefiting off the volatility. But in terms of share appreciation, it's just not really breaking out yet. And I think the rate cuts will hopefully get them there. UNH, are we still at 305? UNH 301. That's down about 3%. What do you think about UNH? Same thoughts on UNH. I think it's bullish because the CEO is buying. I wouldn't buy it because I think like there's just better opportunities. I'd still rather buy more Nvidia. I'd just rather kind of consolidate into certain plays. But most people buying UNH, I don't think they're buying it because they love the business. They're buying it for a recovery. And if you took a shot below 270, you kind of got your recovery, at least to an extent. But if you're buying it here, now you're just hoping for like a 350, right? Which it might just be harder to go from 250 to 350. It was a bit easier to go from 250 to 300, given how depressed it got at 250. So I think if you're buying it here, you're just hoping for a big rebound. And I don't know what the catalyst is to create that rebound, but the catalyst at 250 was that 250 was the bottom. And so that's why it easily got a rebound along with that insider purchase on UNH as well. So that's why it's moving right now. Roblox goes green. That one going green. HIMS about to go green. Roblox right there, 81.53. And then HIMS is at 62.96, still down 2.6%, but HIMS holding on to that 3% move. Where is CoreWeave? CoreWeave also 84.50. Wow, CoreWeave up 5%. That one not slowing down at all. Pretty exciting, dude. Pretty exciting. Broader markets not really letting this go as easily right here. Let's get a quick update right here on Moodys again and kind of what happened on Friday, and then we'll keep going from there. But this was the downgrade that we got on Friday.
Indicators expected down 1%. It's hitting the wires at down 1%. So exactly as expected. And in the rearview mirror, minus 0.7% becomes minus 0.8. And do keep in mind, this is the 38th negative month out of the last 41. 38 out of 41 are negative, and minus 1% would be the most negative it's been since March of 23. We do see that interest rates are coming off their worst levels. The notion of the downgrade and, of course, the tax policy that's being debated is certainly drawing attention to debt and deficits. But worst case scenarios don't seem to be met as interest rates are coming down a bit. But that psychological level of 5% on a 30-year bond and 4.5% on a 10-year and 4% on a 2-year are key areas to pay attention to. Carl, back to you.
All right, Rick, thanks so much, Rick.
Okay, so those were some leading economic indicators that went a little bit better than expected, and that came in after the Moody's downgrade. The 10-year right here is still down or still up on the day, 4.517. Very green, not the good type of green on the 10-year. Bessent's going to have to do something to hopefully resolve what's happening currently right now. But, we're going to have to see what tricks he has up his sleeve to kind of be able to deal with this. And also, the other thing that's really interesting about this is obviously the tax bill, right? Why the reason the 10-year is spiking this much is not really because of Moody's. It's because a vote from 21 to 16 got passed last night on the House committee on passing Trump's deal. Here's an update on that deal. It's probably going to deficit a bit higher, and that's why the 10-year is reacting to that right now as well.
Emily. There are a lot of late night hours, Becky, and there is some more to come this week. But the big headline today is that Trump's mega bill and that tax package, it cleared yet another hurdle after a weekend of intense negotiations between Republican leadership and fiscal hawks. But at this point, Trump mega bill, it still lacks the support to be able to pass in the House. The 4 Republicans who blocked the bill on Friday, they just haven't gotten to yes as of last night. Congressman Chip Roy, Ralph Norman, Andrew Clyde, and Josh Brecheen, they all voted present. So they allowed the bill to pass, but the holdouts were making a statement there that they want to see more of the cuts to clean energy tax credits and cuts to Medicaid start sooner than the timeline sets out in the current bill. The House Freedom Caucus also released a statement last night saying that as written, the bill continues increased deficits in the near term with possible savings years down the road that may never materialize. The statement goes on to say that even after negotiations, the bill fails to actually honor our promise to significantly correct the spending trajectory of the federal government and lead our nation towards a balanced budget. Of course, the fiscal piece is one issue, but it's not the only one. Remember, there are other things that GOP leaders are trying to negotiate on. Things like the state and local deduction or the SALT caps also have to be figured out. Remember, if these cuts go too far to get the fiscal hawks on board, Republicans could then wind up losing support from more moderate members who really are trying to protect benefits for their constituents. Speaker Mike Johnson set a deadline of this week for the House to vote on the mega bill. The next hurdle is going to be a Wednesday morning at 1 a.m., more late nights, when Republicans can have yet another committee hearing where they can make any final changes before a floor vote. Becky?
Here's the thing. I think they're going to get it passed. I don't know if they're going to necessarily get the Medicare cuts for illegal immigrants to get passed. I think that's the big holdup with a lot of these Republicans currently right now. Moodys, by the way, their stock down about 0.16%. But if they get this passed, I don't think anyone should be upset or necessarily surprised is the better word if the 10-year spikes, because like objectively, and no one's been able to explain to me how we're going to pay for the tax cuts that the Trump bill passes or the deficit increase with the raising of the debt ceiling. Now, the only answer Bessent has given us, which is I think the only answer that's quite frankly believable, is that we will outgrow our level of spending, which again, this kind of what I was talking about in the morning. It's not to be kind of morbid about it, but every single administration has spent excessive amounts of money. And unfortunately, we are in a world in which this is the nature of how we're going to spend. If we're not going to get rid of Social Security or Medicare, like we're going to keep spending. And the only hope we really have is just that the rate of our spend is not as large as the rate of our overall GDP growth, and that we can pay off our debt in a timely manner, even if we are paying massive amounts of interest on it, to continue to show legitimacy in the bond auctions and still have a buyer of our bonds. The only part where this gets really scary is if we can't get a bond auction to complete, which is what Tom Lee was talking about, and people go to Japan or Australia or Canada over the US. As long as that doesn't happen, we will always have a buyer. And if we always have a buyer, technically this show can go on forever. But again, this is one of the reasons why Lynn Aldrin says that Bitcoin is the inevitable answer. And the more and more I think about it, I mean, it's hard to deny that thesis. Her argument, I think, what's the name of her book? Broken Money or something? It's a really good book that basically goes into the concept of how structurally we will debase fiat currencies no matter what happens, because the level of spending from the government is quite frankly inevitable. We have a military we're spending $1 trillion on. We're not fighting any wars right now. Why are we spending $1 trillion? Well, because Trump wants to spend $1 trillion. And if Harris was president, maybe she would spend less on defense, but she would spend more on social stuff. So whatever side of the aisle you're on, you're going to be spending money, which means the dollar will consistently get devalued. And this charades can go on for a long time. But the one thing that might be used as a counter hedge to the debasement of that fiat currency is Bitcoin, whether you like it or not. So yeah, I mean, that could be explaining why Bitcoin is still above 100,000, even though the NASDAQ has not necessarily gotten back to all-time highs. Bitcoin really didn't even tank with the NASDAQ. But it also does mean that maybe the debt crisis is not the biggest thing we have to worry about, and maybe the bond markets will overlook it. As of now, they're not. And, you know, until they do, we're going to have to see what Jerome Powell thinks about when it comes to rate cuts. Let's get an update right here on what Jensen said yesterday as well in Taiwan, and then we'll keep going from there.
Their own CPUs or AI chips into Nvidia's ecosystem for the first time. Marvell, MediaTek, Qualcomm were some of the partners listed. Competitor Broadcom, notably missing. Tech giants, though, can pair their custom silicon with Nvidia's technology, potentially unlocking significant revenue growth as more data centers would adopt Nvidia's server platform. So it's really about owning the entire stack. But Wedbush analyst Matt Bryson wonders if it's really going to grow market share because of limited demand for these third-party CPUs from Qualcomm, for example, and that hyperscalers would just prefer to use their internal networking products. But it's also why Qualcomm CEO told CNBC London this morning that the company will soon launch a new data center CPU specifically designed to connect with NVIDIA's GPUs and software, though the exact timeline remains unchanged. So big news coming from Qualcomm. Going back to NVIDIA, though, they also unveiled plans to partner with Foxconn on a massive AI factory supercomputer in Taiwan, powered by 10,000 Blackwell GPUs, with TSMC leveraging the system for research and development, as well as creating a second headquarter in Taiwan to provide proximity to key partners as well as employee talent. But NVIDIA shares were up, 16% last week. And Jordan Klein at Mizuho says a lot of momentum chasers came in pretty hard for Jensen last week. And many were also expecting a new NVIDIA AI PC chip as well. So it could be why you saw shares open negative this morning and really just trending flat right now, David.
Yeah, Christina, although to your point, they are now flat. So they are up on the session, at least less than an hour in. Christina, thank you. Let's get the Street's take. Bernstein analyst Stacey Raskin joins us. He's got a buy rating, 185 price target on the stock. Were you in some way, Stacey, at all disappointed in terms of the announcements we got out of Taiwan from Jensen?
No, I thought they were pretty positive. I mean, like Gen Sanity, I guess, is a very funny. I think that's a good a view of how he's perceived over there. I thought the announcements were good. I think to Christina's point, the NV Fusion, NVLink Fusion announcement was to me the most surprising. They are opening up the ecosystem to other partners, which I think is good. I thought, to her point, also like the missing folks were also very interesting. Intel and AMD and Broadcom. They have a competing interconnect. There's an open standard called UA-Link that they've been trying to develop. You've got like the second tier ASIC players that are part of Nvidia's thing. I mean, maybe trying to like boost them versus some of the leaders like Broadcom. I thought overall, look, he said that the GB200, like the current products are in full production. GB300 is well on its way. That's coming very soon. Bunch of other product announcements. Everything. I thought it was good. And again, the stock is, it's one day, but the stock is outperforming in a down take today. Like I thought it was good.
Yeah, and as Christina just said, obviously very strong week last week. The diffusion rules are gone. Is that the last overhang though, in terms of at least what's going to replace them and whether it still will put up some barriers to their ability to sell?
Yeah, so the diffusion rules are gone. So that does remove a near-term headwind, because remember, they report on the 28th. If the rules went in place like on the 15th as they were supposed to, they would have had to guide with them in place, and that may have caused some issues. It does look like, there was some talk about Trump replacing them with like individually negotiated bilateral agreements, and that does seem to be maybe where we're going, especially with all the announcements out of the Middle East last week. That could be good or bad. I think at least in the near term, as long as you don't have to sign them, to enable Nvidia to sell, like I think it's okay. But ultimately, it may take time, to negotiate 120 like distinct, bilateral agreements. Personally, I also don't like the idea of tying this stuff to the trade deals, which seems to be where they're going. But there was at least the deals that they signed with Saudi Arabia and the UAE last week were actually quite positive. They were very big. And if we start to see similar deals, elsewhere, I think this can be good. At a minimum, it doesn't look like you're going to be constrained in the near term in terms of what they can sell to the majority of the world. And I think that's a good thing. That was a big worry when we were concerned that the diffusion rules actually would get put into place.
Yeah. It looks like that's not slowing down, folks. It looks like that's not slowing down. Nvidia right here, 135.19. Again, the products they announced last night, to me, just make the cyclical narrative stop being as cyclical if Nvidia can continue to get into new geographies and obviously work with the hyperscalers in a much more meaningful way. This is the official China update that we were looking for in terms of what China had to say. So here's what they wrote in their statement today. Okay, this is expanding from the headline we got at 9:30. The U.S. is abusing export control measures by imposing stricter restrictions on Chinese chip products under baseless accusations. So they're definitely talking about Huawei right here. It even interferes with Chinese companies' use of domestically produced chips within China. This overreach is a classic example of unilaterally bullying, and China firmly opposes it. The U.S. actions seriously infringe upon the legitimate rights and interests of Chinese enterprises, severely threaten the security and stability of the global semiconductor supply chain, and gravely disrupt global technological innovation. Tripping others won't make you run faster. These unilateral protectionist efforts to block and isolate other countries will ultimately damage the U.S.'s own industrial competitiveness. In the end, it's like lifting a stone only to drop it on your own foot. Okay, so China's mad. China urges the U.S. to immediately correct its mistaken policies and stop its discriminatory pressures against China. Both sides should uphold the consensus from the Geneva high-level talks, enhance communication through mechanisms such as the China-U.S. economic and trade consultations, effectively manage differences, and negotiate to address each other's concerns. The goal should be to build a sustainable, long-term, and mutually beneficial bilateral economic and trade relationship. If the U.S. persists in going its own way and continues to substantially harm China's interests, China will take resolute measures to safeguard its legitimate rights and interests. Okay, so apparently we did something to the Huawei chips. That's what China's upset about. That's not even Nvidia right here. It has to be about their own domestic companies, which is what they're quoting. And that's why they're upset at us. I guess we will get the United States response soon, hopefully. But look, I mean, I do see China's point. It's like, dude, we're getting close to a deal. Like, we probably shouldn't strong arm them by like taking away any of their powers as well when it comes to exporting Huawei chips. Like, we just need to get a deal done at this point. So I get that they're upset. I also get the U.S. might have some real national security reasons to not take off some of these restrictions they have. But at the end of the day, we need the easiest way to get a deal. And hopefully that happens sooner than later. Because, the markets can easily get upset again if we go a couple months without any major progress on China. I mean, like we're kind of holding off the markets with this 90-day pause. But if we're in September and we don't have any meaningful framework for a deal, like I don't think the market's going to love that. So we definitely do need to figure out how to resolve this situation soon. But even reading from that, China, they're not like sounding aggressive. They're kind of like almost whining a little bit. They're kind of like, hey, can you like not be a bully? And it's one of those things where 2 months ago they were, putting out memes of the United States workers trying to make iPhones, right? It was just like a totally different vibe. And now it's just like, hey, can we like work together? Can you guys stop being a dick? That's kind of the vibe I'm getting here. And I feel like that's a little bit more bullish than not in terms of eventually getting to a deal. Robinhood right here, 62.78. That's up 1.62. SoFi 13.78. Palantir 126. And then Nvidia falling just below 135, but still a nice recovery from the pre-markets. Jack says, as long as Nvidia goes up, I don't care. Well, if we can get Nvidia to start selling back into China, that would be really bullish. But seems like that's going to take some time before that part of the negotiations are resolved. CoreWeave up 5%. I do think by the end of the year, Nvidia will sell back into China, even if it's just the H20 chip. I think that's one thing that China is going to really want as a concession, and they're going to give up something good for us to get that. But I think inevitably that money will come back, and that's something that could help boost the overall earnings as well. Should I sell my Nvidia and buy a Rolex? I am pretty anti watches. I've just like never loved wearing them, or I don't think they're that cool, but there is a nice market for Rolexes. And so if you were to buy a Rolex, I don't know if it would accelerate in terms of its value as much as an Nvidia stock, but there is a market. It's not like a car, right? That like, even if you buy a Lambo and you don't drive it, there's still some depreciation. Whereas a Rolex, if you keep it clean and keep it in mint condition, like you could actually resell it. But I've never got into the watches game, even though I do know there's a massive market around watches. But I'd hold on to your Nvidia, quite frankly. Girls love watches on a guy. I don't need a watch, because to me, given my ambition, the time is always now. So I don't need to look down at my wrist and be like, oh, it's 5:30. It's like, no, the time is now. You got to get to work. Time is always now. So from that perspective, I hope that a girl would appreciate my ambition over my watch. Let's get to Jeffrey's analyst and his take on Moodys. This is actually one of my favorite analysts. Let's see what he has to say about the Moodys downgrade.
Relevant largely in 2011 or any other time one of these rating agencies has come out with a call. I mean, rating agencies should be looking at company balance sheets, not country balance sheets. They're just not really equipped to do that. The U.S. prints its own currency like many other countries, and the idea of default risk is just a really silly idea, to be honest with you. But look, people will focus on it for a little while. It'll be fleeting, and we'll be off to more important things like the budget bill, which, as you mentioned, is probably the biggest story this week and got out of committee. I think the market will focus on that in a positive way. And of course, the fact that we're back to unchanged or even up on the year in the S&P, bond yields largely unchanged. And the big story is currencies, which is we're about 10% weaker in the dollar. And I think that story is very supportive for U.S. risk assets going forward into the summer.
He's right about that, dude. We are 10% lower on the dollar, which, remember, the dollar was at 112 back in February. Like, it was getting ridiculous. It's now at 100.3, which is way better for international stocks and overall countries that want to trade with us, because they don't have to pay as expensive for our goods. Gold is up about 1% right here. And then you got Moodys, which the market with the S&P 500 right here showing you they don't care. They do not care about Moodys. S&P barely down 0.28%, 592. I mean, you couldn't even hold it below 5. This is why I think we're getting back to 6,000 probably by the end of the month, if not in mid-June. I mean, like, it is, if Moodys could not take us down, if credit markets going to 4.5% on the 10-year, 5% on the 30-year, which we didn't talk about, but we are above 5% on the 30-year. If the Japanese bond being at the highest it was in the past 40 years on the 40-year bond could not take the S&P down meaningfully, then what does? Right? Like, I think the worst of the news is baked in. And now it's just a question of when do people start really buying in? And when does that big money come in even further to get us to the next leg to go higher? But credit markets are screaming right now, and the stock market doesn't care, because the stock market knows that eventually either rates will get cut or we'll have to resolve this via SLR ratio, something that will be put in place by the Fed, or the Fed will just turn on the money printer, quite frankly. But risk assets are not really taking a break right here. We got a new interview by Cathie Wood. Here's a 2-minute clip from Bloomberg. This came out this morning about what her thoughts are when it comes to Elon and potential brand damage.
Make sure we don't blow ourselves up with these deficits.
But you must have been concerned about brand damage for Tesla.
Brand damage, yes. And
Is
it
it
has
long-term?
happened. I do not believe so. Tesla, we believe, will have a lock on the robotaxi business in the US. First robotaxi is launching in Austin in June. And we believe they're going to proliferate through the United States, especially if we move regulation from a state level to federal level, which we believe will happen, is going to proliferate through the United States, I think, more quickly than...
The call with Putin has begun. The call with Putin has begun. That came out 7 minutes ago. They are currently on the phone right now. We should get an update from that call probably in about 20 minutes.
Many people expect. Many people don't expect it at all. So that's going to be easy to beat. So yes, it did hurt, but what also hurt was macros. All automakers, until this tariff swoosh, to get ahead of tariffs, all automakers have been suffering, and especially in the first quarter. The news cycle passes quickly in the United States. And now that Elon is stepping somewhat aside, not completely.
Which you welcome.
Yeah, no, I think the shock value of what he did was important. And now he's got a team in place that is going to follow through. And the way that Elon works is he sets milestones and time frames. And when
But he often doesn't meet.
When they are not met, he goes in and becomes ultra focused, and you hear about the mass layoffs and all of that. So
is there a concern to you in your mind around, I mean, we talk a lot about decoupling in terms of the trade war.
All right, so Cathie is cool. Cathie's essentially saying, hey, Elon and Tesla will be fine. I mean, Tesla stock obviously has been fine since the earnings they put up. We're not hearing that much more about brand damage. I'm not seeing that many Teslas getting vandalized, and they're not making headlines every day that someone's keying a Tesla or anything. So I think that is starting to die down a bit. Elon, although he still has political tweets, it's not as many as before. I mean, he's tweeting a lot more about Tesla. He was tweeting about Tesla's price the other day, and basically telling Tim Waltz that he's an idiot. So, at least it's less political. It's more about the stock in and of itself. He's retweeting a bunch of stuff about SpaceX. Like, I think he's kind of getting back to not worrying about the government as much as he's worried about Tesla stock. And you're seeing the stock kind of recover from that 220 low up to 340 right here. And again, even if some of these valuations don't make sense, which I'm very sympathetic to, because I also care about valuations in this type of a market. Not saying valuation doesn't matter. It's just if the sentiment is momentum is driving things, more and more deals are being announced, whether they're trade deals or Saudi Arabian deals to Nvidia, and earnings growth, which is the number one thing, is upholding itself, which it is, and it was way better than what the market thought we would get for Q1. Q2 is the first quarter after the tariffs, but let's say earnings are still pretty damn good going into Q2. What's the reason to sell? Like what is that big boogeyman in the closet that is scaring people out of stocks outside of the tariff stuff, which is hopefully not going to be as aggressive? There might be some headlines here and there that are volatile, but that doesn't mean it's Liberation Day over again. So I think a lot of the bears have to ask themselves that question, right? A lot of the bears, the thing about the thing about April that was so annoying is that the bears ended up being right for like a week, but they were right because of the dumbest reason. They were right because Trump decided he wanted to tariff Zimbabwe by 45%.
Like if that was the reason why we were going to ruin this economy, that reason was easily reversed, as we've seen that has happened. And if you were bearish and you got kind of high on your own supply and you got so cocky that, you know, your bearish thesis came to truth, not because of what you thought would be the reason, aka inflation, unemployment, kind of these macro indicators. It was because of a stupid reciprocal tariff. And you actually used that as the justification to say you were right about being bearish. You completely missed the reversal. Completely. And this is why, again, bears sound smart, but bulls make money. It's just like every bear that I knew back in January, February did not think the tariffs were going to cause the recession. They thought it was going to be something else. It just happened to be the tariffs, the most draconian tariffs you could imagine. But you kind of have to have a little bit of common sense of thinking, hey, that's going to be reversed eventually. Like I remember when China announced the 125% tariffs and we were down another 3%. I remember that market open. I was like, it felt like a game at that point. I was like, oh, this is stupid. This is actually stupid. Like now this is legit stupid. Unfortunately, I bought TLT that day because yields were spiking. And I was like, oh, well, yields can't get higher than this. And yields did get higher, unfortunately. But the point is, at some level, the bearish argument in February or in April was right for a week. And then we went back to normal. So the question now is what creates another bearish narrative that takes us all the way back down? And I don't know if it necessarily exists. And it could be out there. Maybe I'm just not seeing it. I would love to get any theories, but until earnings growth starts to decline, I don't see what that big argument is. ASO Rock Watches says, forget a Rolex, get an ASO Rock watch. Thank you for the $10 super chat. I think this must be your company. ASO Rock Watches. I pulled it up right here. They look like Felipe's or something. They're only $100 though, so it's not bad. There you go, $150. It looks more expensive. Some of these watches, bro, I see them on like rappers or like rich people, and they're like even Carp. I think Carp wears like a $300,000 watch. What's the main watch brand called? What's it called? It's Richard Mille. Richard Mille, that thing. Yeah, it looks like a Richard Mille, exactly. This ASO Rock thing looks like a Richard Mille. So there are a lot of knockoff brands that try to just replicate the design. But yeah, Patek Philippe. Did I say it totally wrong? Dude, I'm so bad at watches. Felipe's? Oh, I meant Patek Philippe, not Felipe. What is a Felipe, dude? Holy crap. This is how you know I don't know watches, but the point is you can get, that's what I should get, a mock Richard Mille, bro. How much is a fake Richard Mille? I would actually love one of those. I'm going to buy one of these shits from China, bro. ReplicaRichardMille.com. There you go. No, these are too expensive. These are $600. I need something for like $20, bro. Give me a $20 Richard Mille. I'm going to start wearing a fake Richard Mille. I'm going to start going out on dates and wearing a fake Richard Mille. And well, we'll see how much of an impact it has or not. Dude, that's hilarious. I'm going to get one of these. I'm absolutely going to get one of these. John, thank you for the 50 super chat. Hey, mate, it's my birthday today, and the biggest thing I'm grateful for this past year is yourself, your channel, and this community. Here's to another year of financial gains. John, happy birthday to you, brother. Thank you for being here. Thank you for being part of the channel. Hope you've been enjoying it. And yeah, thanks for being part of the community, dude. It's been a really, really fun year. It's been a volatile year, but we go up as a community, we go down as a community, and hopefully this continues to be a safe space where you enjoy sharing your thoughts and being with all of us. So happy birthday, brother. Thank you for being here, and thank you for being part of the channel. CoreWeave right here, really getting some love, bro. Look at this thing. Freaking CoreWeave. This thing is really getting some momentum. Did not think CoreWeave would explode like this. Up 8%. It was up 22% on Friday, bro. This is a 30% move after earnings on CoreWeave. This is pretty incredible, dude. Whoever's long CoreWeave, congrats. I think Tanner went long CoreWeave a while ago too, like literally a week ago. So he must be enjoying this right now. Abby, thank you for becoming a channel member. Appreciate you, Abby. Thank you for becoming a channel member. A lot of you guys have been asking, what do you get if you become a channel member? You literally get nothing. There's no exclusive content or paywall content or anything. Everything is like, I just don't put anything behind a paywall. So don't feel sad if you don't get a gifted membership, because you don't get anything special. It's just $5 a month to support the channel. But yeah, there's no like special privileges to being a channel member. It's just the support. So appreciate you, Abby. Thank you for becoming a channel member. Where is Nvidia right here? Are we still at 134? We are at 134.34. All right, so Nvidia getting rejected at 135. We did break above 135.50. We could not get 136. That had 137,000 shares. So now settling in around that 134 range. Why is everyone so mad about how I say Richard Milley? That's how you say it, right? Richard Milley? It's Richard Mill without the Y? No, but don't they spell it with a freaking E? Is the E silent? Why is there an E then? Oh, you're right. Oh, it's a Richard Mill. Oh, that is how you say it. Oh, damn. Oh. Why is there a stupid E at the end of the mill then? What's the point of it? Why would they put the E? They don't even put an accent on the E or something. What's the point of that? Richard Milley sounds cooler though, right? It's like a Millie. Sounds better. Bitcoin back to 104. There you go. Wait, who's a watch guy in the chat or a watch girl? Put in the chat. Who's a watch person? Like you actually wear a watch, like a good watch, not like a Casio or something. Like an expensive watch. Let me put that in the chat. Do you wear expensive watches? And then if you do, put if it's a Felipe or a Rolex or a Richard Mille. Apple Watch does not count. Okay, the Apple Watch is not a luxury watch. It's a good watch, but it's not like you're not, no girl I think is gonna be impressed by your Apple Watch, is my point. So put in the chat if you actually wear a real watch. Wow, 70. Okay, I thought it was yes. 72% of you say no, but 28% of you said yes. I see a lot of Rolexes. I see Timex. My Garmin is expensive, but it's not an expensive watch. Okay, so what classifies as an expensive watch then? Like what's expensive? Like 10,000 or more? Or 5,000? What's the threshold for like, okay, this person really cares about their watch? I would say it's a minimum of 5,000 and realistically 10. Like a Rolex is like on minimum 10,000, right? Like a good Rolex. 10K, right? Yeah, 10K. And then if you're wearing the 50K, 100K watch, you've you've made it in life. But I feel like 10K, even if you're not super rich, but you care about watches, you could splurge on a 10K watch. Yeah, everyone's saying 10K. Everyone's saying 10K. Yeah, dude, I've just never been into watches. I've never been into it. I've never, even my mom even got me an Apple Watch like 7-8 years ago, and I made her return it for my birthday. She got me and I was like, I'm not gonna wear this thing, dude. I'm not gonna wear an Apple Watch. So I've just never been super into it. This is an update on the JP Morgan Investor Day. Let's take a look at this and then we'll keep going from there.
Jamie Dimon is scheduled to speak this morning. Our Leslie Picker's live on the scene with the latest. Morning, Leslie.
Hey, good morning, Carl. Dimon planning to give closing remarks in about 50 minutes time and answer questions from investors and analysts here. He's likely to comment on the macro environment, including the Moodys' recent decision to downgrade the U.S. credit rating and the broader fiscal picture in this country. We actually spoke 2 years ago on CNBC the day after Fitch made a similar move, and Dimon said at the time that it doesn't really matter. So we'll see if he still feels that way. Succession, of course, will be in focus, with BofA writing today that, quote, any signs that Mr. Dimon would stay in his current role as CEO for 2 to 3 more years would be very bullish.
Here's the question. Who replaces Jamie Dimon? Put in the chat the best CEO currently that you think can replace Jamie Dimon. And quite frankly, is not an original idea. I think Jeremy said this last week on his channel. I think Noto. I think JP Morgan swallows up SoFi. Noto becomes the new CEO. I would 1000% think that's a good move. But I'm curious if you guys have any other names on who could be the next CEO of the most valuable bank in the country, $700 billion, JP Morgan.
So far this morning, we've heard from several contenders of that seat, including Marianne Lake, who runs consumer and community banking. She said the hard data around consumers, things like spending growth and cash buffers, indicate resilience, while noting sentiment among that cohort and small businesses has deteriorated. 2 other potential CEO candidates, Doug Petno and Troy Rohrbaugh, just started presenting on the state of the commercial and investment bank. So we'll bring you those headlines as we get them. In his opening remarks, CFO Jeremy Barnum reaffirming guidance on net interest income, the profitability metric for loan making, as well as the guidance on expenses, although he noted that the outlook for NII is slightly better than it was just a month ago during earnings. They're not quite ready to boost those expectations yet, though, David.
Yeah, I think Diamond's going to be talking about his succession plans, dude. He's got 2 years left, or I think he has 1 year left. He might extend it to 2 years, but he talked about this, I think, in an interview with Meet the Press 5 months ago that he's getting ready to step down. He started selling JP Morgan stock for the first time in 20 years also. So like that was also a sign that he's probably getting ready to step down. Robin is 62.76. Question is, are they going to get a rock star to replace him, or are they going to get someone who's underneath him to replace him? And it's going to be a little bit more of a boring upgrade. Most likely it's going to be a boring upgrade. I mean, these banks kind of don't want to ruffle feathers too much, but JP Morgan, that's a big bank, dude. You need someone like a Jamie Dimon, someone with the personality. Yeah, I mean, if you ever heard Jamie Dimon talk about what happened in 2008, let me see if I can find the clip. In 2008, he was one of the main people that was called on by the Fed to try to help resolve the extremity of what was happening. And at 1 a.m., he went up to the New York Fed and he started talking with Ben Bernanke and tried to figure out how to navigate it. So you need someone who can really be there when shit hits the fan, because inevitably shit hits the fan. And someone like a Jamie Dimon, has been ideal. Might be an internal candidate, as there is a lot of stress on building leaders. And if he couldn't build any in the last 10 years, then there is a problem. Well, that's a good point, right? If you couldn't find anyone over the past 10 years that can meaningfully replace him, then it might just be an internal candidate, and you keep it kind of simple. And the markets might not freak out if it's like his chief of staff or anyone who's really close to him and beneath him that takes the mantle. But I feel like you need a rock star running JP Morgan. Dude, JP Morgan will be the first $1 trillion bank. Like, that's going to happen. JP Morgan's at $740 billion. Like, I don't know, bro. I feel like in the next 5 years, they get close to $1 trillion, if not sooner. Like, JP Morgan grew their net income by $8 billion last year. It's insane. Absolutely insane. They are not losing any market share. They are growing more and more. They are the number one bank that people care about in the United States. They're trading at double their book value. So they get a multiple of 2 on their price to book, which most banks don't get. And it's because of their growth and because of, quite frankly, probably their leadership with Jamie Dimon. So maybe it takes a little bit longer than 5 years, but I do believe JP Morgan's on its $1 trillion trajectory. A lot of you guys are saying Steve. I don't think Steve would want to be the CEO. You guys are saying Amit. I don't think I would be able to effectively run a bank. I would probably bankrupt the bank, to be honest. Tanner might not be the worst CEO. I think Tanner knows a little bit more about banks. They need to get someone really freaking cool, bro, for JP Morgan. And again, I think Noto, I think that's perfect. I think Noto already is so bank-esque in terms of his personality. He came from Goldman. He's definitely not like super tech company oriented. I don't get the vibe from Noto on that respect. So as a bank CEO, I don't think it would be crazy. Garland of Truth, thank you for the $10 super chat. AK Media, best news channel. I've been watching this channel for a year now. Appreciate you, brother. Thanks for being here. We just crossed 75,000 subs on the channel. So really, really appreciate all the support. And we're just going to keep growing. We're going to keep growing and do what we got to do and try to cover this as in depth as we can as a community every single day. Pounce right here, $125.99 in video, $134.71. By the way, again, Boston meetup. I sent the form out this weekend. It'll be happening on Saturday. So if you want to come through, you can get the details again. I'll send out another email in a couple days. But we are doing the Boston meetup on Saturday. And I will be FSDing all the way to Boston. So that should be fun as well. Larry Fink. So Larry Fink is an interesting candidate, but he's already running a company that's probably more important than JP Morgan, quite frankly, which is BlackRock. So I don't think Larry Fink would give up the throne. BlackRock's market cap, $150 billion. The reason I say it's more important is because BlackRock actually has a input on company decisions because they own so much stock inside of companies, and they're kind of forced to buy so many shares in public companies. So they can actually impact the way a company acts. And I think Larry Fink likes that power. So I don't think he would leave to JP Morgan, but I don't think he would be a horrible CEO. Let me see if there's any updates on here on the Trump Putin stuff. That call probably still going on. Okay, no update on that. We did see that Ukraine TV is saying that Trump will speak to Zelensky after the Putin call, so we'll get an update on what he says to Zelensky. Then we got this update from Scope Ratings. U.S. public debt trajectory and interest payments set to worsen and exceed sovereign peers. Pretty much just echoing what Mitch said, or not Mitch, what Moody said. Yeah, we got a deficit problem, but I don't know if we necessarily are going to resolve it anytime soon. And I don't know if that means we have to sell stocks even if we don't resolve it. It's kind of this weird situation we're going to be in for the next decade, bro, where we're going to have crazy deficit spending, but there's not really going to be a solution outside of growth. That's pretty much going to be it. By the way, we do have a Palantir contract right here. Palantir, $217 million. There you go on Palantir. This is the U.S. Space Force Systems Command, U.S. Space Force and the Space Systems Command. So the USSF and the SSC are advancing their Space C2 data platform to provide enterprise data storage and data management solutions, including seamless, synchronized, multi-domain warfighting to space and air operational communities. This is a $217.8 million contract for data software services, and they selected Palantir to provide the Space C2 data platform. There you go. Now, here's the question. How many years? How many years? That's what I want to see. If this is 1 year super bullish, looks like it's a little bit more than 1 year. I don't have the years on this. It came out today. Yeah, I don't have the years on this, but it is $217 million. So even if it's a couple years, that's $100 million a year. Not too bad. Again, the government business continues to grow. I don't think it's 20 years, bro. That 20 years is a big and aggressive. The Palantir's gotten a similar contract like this a couple years ago. So I think it's probably like a 5-year max contract, more likely 2 to 3 years. But 217 million, not bad for Palantir. Palantir right here, 125.79, Nvidia 134, Tesla still holding on just below 339 right now. Amit, check out HIM's June 20th call, $90 strike, 215. We actually looked at this last week. Mike, thank you for the super chat. Yeah, look, I agree. The HIM's contracts on covered calls are insanity. Someone paying you $90, or sorry, someone paying you $215 for a $90 strike in a month. That means HIM's would have to go up from this price 45%. It could happen, but if it doesn't, that's like taking money from a baby, right? Like that's easy money in these covered calls, and the premiums are jacked. So yeah, I don't hate it. I don't hate writing those 90. And if you do have to sell at 90, okay. Like, okay, you get to sell at 90. I mean, that's well above its all-time high at 72. Like, I don't think anyone would be upset at selling some shares at 90. So if you got HIM shares, the covered calls right here, they look like pretty easy money. Now, could it get to 90? Sure. I mean, if the short squeeze gets that crazy, that could happen, but definitely not too bad of a risk to go that out of the money and get that premium. Nick says it is awkward that I bought that one. All right, so you're selling those calls to Nick right here in the chat. He's being the degen who's buying it, and quite frankly, he's probably going to be right given how HIMS is going. But dude, I don't know, a 45% move in 1 month on HIMS. I just think it's a little aggressive, but granted, I didn't think it would be at 60 this quickly, so my opinion has been wrong here. $90 by June just feels a bit up there. Dude, the $75 call is paying you $500. The $95 call, which is the highest amount you can go to, is paying you $160. See, it's a moment like these where I wish I had a couple thousand HIM shares. Because just the ability to sell the volatility against them, it's like printing money, bro. It's pretty incredible. Granted, a lot of people think HIMS is going to 100. So, I mean, that's why those calls have the volume that they're getting currently right now. Alibaba right there, 121. That's recovering a little bit. It was down 3%. Now it's down 1.2. Nvidia, 134. And then Tessie, 334 currently right now. Okay, so we talked about that Palantir headline. We talked a bunch about Nvidia. Here, take a look at this. So North Korea, they just put out some footage to the world on their military. And it's basically showing off the strength of their soldiers. That looks like it hurts, bro. That looks like it really hurts. But yeah, and now he's going to sit on this like bed of needles or something. So they're trying to show the world how strong they are. There's Kim Jong-un proudly looking at his proud soldiers here. I don't know if they think this is supposed to scare us or something. Because like, if I'm the DOD, I'm just like, okay, cool. Like, this is supposed to make us afraid of your military. This is supposed to make us think that you guys have a strong military. But this is a promotional video they put out today to show how strong their military is. See, quite frankly, they're showing physical strength, but they're not showing technology. And this doesn't matter. Like, this shit is irrelevant. Like, what matters is AI drones. What matters is what's going on via software that's creating autonomous warfare, not like a guy who can sit on a bed of needles. So I think if that's what they're trying to show to people in terms of strength, it's not really the most important thing. By the way, this is what Bessent said over the weekend as well about Moodys kind of flexing the investments they got from the Middle East.
And if we go back to your initial question on the Moodys downgrades, who cares? Qatar doesn't, Saudi doesn't, UAE doesn't. They're all pushing money in. They've made 10-year investment plans. So this administration, we're doing peace deals, trade deals, and tax deals. And if we go,
Bessent basically saying, hey, we've got tons and tons of money coming in from across the world. None of them care about Moodys, right? And I think he's right to be flexing that. Like, the Saudis did not ask Trump about their credit rating before deciding to commit $600 billion of investments. And so I think it is fair for him to be making the argument that Moodys just doesn't matter. Mickey says, Amit, couldn't you just buy the share of HIMS now and sell the calls? Yes, but that means I'm buying them at 60, and I kind of don't want to buy them at 62. So this is why I wish I bought more at 20 or 30 if I cared more about HIMS at the time, because then my margin of safety would be so strong. But I'm not saying HIMS isn't cheap here. I'm not saying HIMS is overvalued or anything. I just personally don't want to buy it at 62 bucks. But for those that, bought it at 20, 30, 40, I mean, dude, if you could sell calls at 90 and get this type of premium, there's not many stocks in the market that have that type of premium when you go that far out of the money. Like MicroStrategy and Tesla and Coinbase are kind of the only ones, and they're super volatile, right? And one could argue all three of them are pretty overvalued or expensive. HIMS, I don't think it's overvalued. I think it's just a short squeeze that's going on right now. And so that's where you could benefit a lot from the volatility. When is the best time to sell covered calls? On a green day. So remember, when things are green, that's when people are willing to pay a higher premium for the call. When things are red, they're willing to pay a lower premium, because why should they pay a premium for something that's out of the money, meaning the strike price that is higher than the current price if the stock is consistently going down? So logically, you sell a covered call on a green day. So today maybe is not the best day to sell a covered call, but even with HIMS down 4%, if you're getting $215 and you kind of just want to sell the call regardless, that's not some bad premium. Now, if you wait till HIMS gets to 70, you'll probably get like $500-600. So if you're a little bit more patient, then you can wait to sell the call. But yeah, usually on red days you sell puts because the premiums go up. On green days you sell calls because the volatility is higher. Nvidia 129 covered call expiring this week. Any thoughts? I would roll it. I don't think Nvidia is going to go back to 129. It's possible, but if Moodys couldn't bring it back down, I don't know what brings it back down. I think you're good though. You can roll it into like the 135s, the 140s for about a month out, 2 months out. I do think you don't want to have any covered calls going into earnings. And if you do, I think they should be super aggressive, like 150, 160 versus like 135, because the world has changed. I mean, Nvidia was at 115 last week, and then the Saudis said we're going to pump $2 trillion into the AI infrastructure markets, and Nvidia is not at 115 anymore. So based on that and the announcements that were made last night, I think anyone who has covered calls that are underwater should roll them out a couple months and kind of just let them marinate versus take a gamble on earnings. More likely than not, dude, earnings is going to be a nothing burger for Nvidia, because it's for the past 4 quarters, and Nvidia's implied volatility was like 10%, and it ends up barely moving 1 or 2%. We do have a China headwind of that $5.5 billion charge off, but I think Jensen, if he is able to pull out a rabbit from his hat and show, hey, we've got all this more demand, we don't even need China, then the markets would be really excited. But Nvidia's already moved up 30% in the past month. So I don't know if that means Nvidia's going to get another 10, 15%. If it does, I wouldn't be upset. And if it does, I also think that's why you don't want covered calls. But I think it might consolidate, which is healthy after earnings. But if we get back to 150, 160, dude, I would not be upset. That would be very fun to see if we can get there. Bessent has easily been my favorite Trump cabinet pick to this point. Dude is an Uber qualified certified G. I 1000% agree. And Bessent, he was funny yesterday, dude. Bessent, it was so funny because the reporter was asking him about inflation, and he was like, well, if like tariffs are inflationary, then tax cuts are deflationary. It's like, obviously there's like a lot more nuance to that, but he knows how to navigate the media, right? Because that reporter was kind of stumped as soon as he said that. She's like, well, you're kind of right. Like if we're increasing tariffs and that's creating inflation, we should decrease taxes, which means the tax cut spending plan is good. Obviously it explodes the deficit, which is an issue, but the point is he's able to navigate the media in a more sophisticated way and not necessarily get caught up like Lutnick does or like Navarro does, where, you know, they just can't really answer questions as appropriately, in my opinion. So not the biggest Navarro or Lutnick fan, but I do think Bessent has a better way of navigating that. Let's listen to a little bit of that Happer interview that he had yesterday on CNN and get some more of his thoughts. I'll be waiting for this Trump-Putin update, which we should be getting pretty soon. But as of now, they might still be currently on the phone right now.
Trip. And there's trillions of dollars coming into the U.S. So we're seeing confidence from investors. So I don't put much credence in the Moodys.
Let's turn to trade, because that's obviously where there's been a lot of focus. President Trump just put 150 countries on notice that their tariffs are about to go higher in the next few weeks if they don't reach a trade deal with the U.S. How exactly will you decide what those new tariff rates will be? Will they be what was previously announced on April 2nd, so-called Liberation Day? And when will they actually go into effect?
So, Jake, we have a 90-day pause. There are 18 important trading partners, probably another 20 strong relationships. President Trump has put them on notice that if you do not negotiate in good faith, that you will ratchet back up to your April 2nd level.
So the 90-day pause isn't just China, it's everybody?
No, the 90-day pause was put on about a week after April 2nd.
Oh, that first 90-day pause.
The first 90-day pause.
Yeah.
And I can tell you that with a few exceptions, the countries are coming with very good proposals for us. And I look at these proposals and they want to lower their tariffs. They want to lower their non-tariff barrier.
This is what he's saying right here. You've either got to believe him or think he's BSing. Because if you're a bear and think he's BSing, you sell because there's no deals in the pipeline. If you're bullish and you believe him and you don't think Bessent's lying right here, that he's getting actually good offers, then it might take a few weeks, maybe a few months, but we will get more deals and those deals will be looked at positively by the market. So the question is, do you believe him? And if you believe him, hopefully we have some more deals down the pipeline.
Some of them have been manipulating their currency. They've been subsidizing industry and labor. And I look at these proposals and I think these are excellent proposals, but I wonder, how did we get here? How did the previous administrations allow this to happen to the American people?
So 150 countries have been put on notice. How many deals do you think you're going to be able to announce and how quickly?
Again, it will depend on whether they're negotiating in good faith. And there are a lot of smaller trading relationships that we can just come up with a number. My other sense is that we will do a lot of regional deals. This is the rate for Central America. This is the rate for this part of Africa. But what we are focused on right now are the 18 important trading relationships.
Walmart announced this week it's going to have to raise prices on some goods, and they blame Trump's tariffs, particularly the tariffs on China. Here's the CEO. Take a listen.
We will do our best to keep our prices as low as possible. But given the magnitude of the tariffs, even at the reduced levels announced this week, we aren't able to absorb all the pressure given the reality of narrow retail margins. We're positioned to manage the cost pressure from tariffs as well or better than anyone. But even at the reduced levels, the higher tariffs will result in higher prices.
So President Trump went on Truth Social and says Walmart should eat the tariffs. In other words, not pass on the prices to consumers. Doesn't that inherently serve as an acknowledgement that tariffs are essentially a tax on consumers? Because initially President Trump said, well, other countries, that's not true. countries pay for the tariffs. But here we have a perfect example. The countries, China gets these tariffs, and then Walmart has to raise its prices. And
this is where I think Bessent didn't have the best answer, but quite frankly, you can't have a good answer. Like the American public will have to pay a little bit more, but nonetheless, yeah, Walmart might not be able to eat all the tariffs as Trump wants them to eat.
Consumers end up paying for them.
Well, Jake, in essence, what you're saying is you're saying taxes are inflationary, so let's pass the Trump tax cuts, and that'll be disinflationary if we continue that line of thinking.
I don't know that you can put me on as endorsing anything, but go ahead.
Let's just keep everything consistent. I did speak to Doug McMillon, who I have a very good relationship, yesterday, just to understand what he had to say, and understand that came from an earnings call. They on an earnings call, because of SEC requirements, they have to give the most draconian case. So Walmart will be absorbing some of the tariffs. Some may get passed on to consumers. But the other thing that's happening is that inflation is down. We had the first drop in inflation in 4 years under President Trump. The other thing that Doug mentioned to me is for his consumers, for his buyers, the most important thing are gasoline prices. And this administration has gotten gasoline prices down. Service prices are down. So
now this was actually the good part of his answer, because although he has to acknowledge, like, look, maybe we'll cut some taxes to be able to offset the tariff increases of prices, and maybe that consumers will have to pay some higher prices in Walmart stores because, Walmart can't eat all the tariffs. The one thing that is the most important, and he's using Doug McMillon's own words here to kind of legitimize the argument, is that oil prices are coming down and inflation's coming down. Oil prices coming down is great for Walmart and their input costs. It's great for consumers in terms of their gas prices. And it's also really good for top line CPI, headline CPI, and core CPI to come down. So he's kind of shifting the argument to say, hey, it's not just about Walmart and increasing prices. It's more so about the overall inflation story in America, which we are bringing down. And that should offset the ancillary price increases by Walmart, which we'll see in the data over the coming quarters. But if that's enough to deal with that, then the market's not going to be that upset about Walmart charging a little bit of a higher price.
overall, I would expect inflation to remain in line, but I don't blame consumers for being skittish after what happened to them 4 years under Biden. We had the worst inflation in 40 years.
So ever since Liberation Day, April 2nd, I have a weekday show called The Lead. And ever since then, every day pretty much, we interview a small business owner. Some of them are Trump supporters, some of them are not, some of them are tariff supporters, some of them are not. The one thing I hear from almost every one of them is the uncertainty. They don't know how to plan for the future because they have no idea what's going to come. The other thing I hear is that their margins, these are small business, their margins are so thin, 5 to 10% max. And they say that these tariffs are just taking away all of their profit margin. So I guess my question is, what do you say to people concerned about the uncertainty? And what do you say to people who say, small business owners who say, we need relief? Because they say, like, I'd love to buy lithium batteries in the United States, but you can't. They're only available for small businesses from China.
Well, couple of things to unpack there, Jake. One is that we didn't get here overnight in terms of this terrible trade situation we have with China, but also with the rest of the world. And President Trump is renegotiating these, and strategic uncertainty is a negotiating tactic. So if we were to give too much certainty to the other countries, then they would play us in the negotiations. I am confident that at the ends of these negotiations, both the retailers, the American people, and the American workers will be better off. That what we saw with China was the only country post April 2nd to escalate. So both sides escalated. We got to an untenable level. We were at 145%. They were at 125%. And we had a meeting in Geneva last weekend, and both sides came down 115%. Mm-hmm. So the U.S. is now at 30%. A 10% reciprocal tariff that's on a pause, and 20% fentanyl tariffs. Those were put on back in February. So those are already in the system. So I think most of the small businesses you're talking to, they were probably They're referring to the very high triple-digit tariff levels, which have now been brought down.
Yes, some of them were, but there's also just this idea, a lot of them saying, look, I support what President Trump wants to do. I support the idea of wanting to bring manufacturing back to the United States, but it can't be done in a month or 3 months or even a year. That there's just an entire infrastructure in this country that is lacking. They can't buy what they would love to buy. Most of them, as you know, if not all of them, are patriotic. They want to buy American goods. But a lot of this stuff just isn't made in America. I mean, we could go into a long history about the hollowing out of the manufacturing base that is neither the fault of you, me, or President Trump. But it does exist, and it will take years to make the manufacturing infrastructure that these small businesses rely on.
Well, Jake, I think what we're going to see, just like we saw with the UK trade deal, my sense is it's what we'll see with China. We don't want to decouple with China. And President Trump actually wants to open up China for business. So the manufacturing we want to bring back, we had during COVID, we realized that we had some very strategic shortfalls, whether it was medicines, semiconductors, steel, the other products. So the medium-term goal is to bring back these strategic industries as quickly as possible. And I think we will continue trading with China in the kinds of products that these small businesses are talking about at lower tariff levels.
So again, China was really upset this morning, and they put out a statement around export controls that they're not happy about with the United States. But you hear Bessent saying right there, by the way, Bitcoin 104.6. Bessent basically saying, hey, we're not trying to decouple from China. We're just trying to get a better trade deal passed with them. And if they can meaningfully architect what a trade deal looks like over the coming months, then I think the markets would be very excited about that. In terms of the Walmart question, yeah, I mean, he didn't have the best answer, because at the end of the day, consumers will have to pay for higher prices. Walmart just can't eat the tariffs. They're not going to have any profit left. They barely have an operating margin. But by the way, Walmart's operating margin is 2.5%. Amazon's 11.5%, 11.8%. But Walmart trades at a 42 PE. Amazon trades at a 33 PE. I don't understand how the market's pricing Walmart or some of these blue chip stocks compared to big tech, but Amazon's still pretty damn cheap compared to these names. Regardless, it does feel that if overall inflation can come down, then consumers will be able to pay an extra couple bucks for products at Walmart. The question becomes, if inflation, like if gas prices were still at $4 a gallon and Walmart's raising prices, then you got an issue. And you have no tax cuts, then there's a bigger issue. But if they can resolve a couple of those concerns in regards to taxes, oil prices, overall inflation, groceries, eggs, etc., if you buy a water bottle from Walmart that costs you an extra $2, I'm not sure that American consumers would feel that much of the pain. And so I think over the coming months, we'll see what the consumer data looks like, but that might be one day that the street is able to look past what Walmart's doing here right now as well. Along with the fact that Trump might just get rid of a lot of tariffs across some of the geographies that Walmart imports by, and that we have to see, what the trade deal exemptions look like. But if they do, maybe Walmart doesn't have to impose those prices either. Rocket Lab right here, 25.12. That's down 1.2. Nvidia just below 135, 134.96. And then Tessie, 338. We did have some other bad news over the weekend that came out. For those that did not see this, President Joe Biden has a pretty aggressive form of prostate cancer, grade group 5 with metastasis to the bone. His statement from his office says, while this represents a more aggressive form of the disease, the cancer appears to be hormone sensitive, which allows for effective management. The president and his family are reviewing treatment options with his physicians. This came out yesterday at around 5 p.m. Trump's response was, Melania and I are saddened to hear about Joe Biden's recent medical diagnosis. We extend our warmest and best wishes to Jill and the family, and we wish Joe a fast and successful recovery. I think, when stuff like this happens, you kind of throw politics out the window. I mean, I don't think anyone would want anyone in their life, family, friend, you wouldn't want to go through it yourself, to deal with prostate cancer at that level. Prostate cancer is actually one of the cancers that has the highest level of success rate in terms of being able to resolve it, especially if you catch it early. If you catch it early, there's a lot of ways with radiation, chemo, etc., to be able to resolve it. Unfortunately, they're catching it at grade 5 level, which is very aggressive. This is going to be a multi-year journey for Biden to be able to deal with this. He wrote right here on Twitter, "Cancer touches us all. Like so many of you, Jill and I have learned that we are strongest in the broken places. Thank you for lifting us up with love and support." So my prayers out to former President Biden as well. I would hope this gets resolved and hope this is not as bad of a process over the next coming years, although it is going to be tough. It is going to be very tough to deal with the grade 5 prostate cancer. And either they're finding it late or they found it, but it aggressively developed before they could even do anything about it. But this is an intense type of cancer. You know, this is not a malign tumor that he's dealing with right here. So prayers out to President Joe Biden. And yeah, and in a situation like this, I think you completely take away politics because, you know, no one wants to see anyone deal with cancer that's that aggressive. We do see Bitcoin right here trying to break 105. UNH is getting a little bit of recovery as well. 307. Wow. UNH outperforming on the day. Look at that. 5.6% right here on UNH, 307.6. Who bought the dip on UNH? Put in the chat if you bought the dip. Put in the chat if you bought the dip. If you did, congrats. You deserve the gains. NEBA is still down about 2%. Robin at 62.15, but UNH doing very well. HIMS right here down about 5% as well, 61.53. Also, if you bought the dip, did you sell? I think that's the more important question because I know some people that bought at 250 and they sold at like 270, and so they made their profits. But if you didn't sell, kind of what's the rationale for continuing to hold at these levels? UNH right here, 308, up 5.6%. Currently right now. Jack bought at 251. I see a lot of you guys saying you bought at 270. Saba bought at 250. Randy, you got the bottom at 249. 248 was the exact bottom, but 249, not bad. Ray bought at 260. Karan bought a call debit spread. What were your strikes on the call debit and your expiration as well? Yeah, dude, if you bought some UNH leaps too, those are up really nicely. Especially, if you bought short dated calls, the puts were up 15,000%. Or no, sorry, 34,000% last week. It was crazy. But obviously the dip buy has worked on pretty well. Yeezy said bought at 270, sold at 290. All right, not bad. I think there's a decent amount of people that kind of got in 250, 260, got out 270, 280, which is not horrible. The thing that could hurt UNH is another headline again that comes around Medicare fraud. That would not be the best thing in the world for them to deal with, but if they avoid that, I feel like the earnings itself should be able to get them back to 400 pretty easily. By the way, Dan Niles put on Twitter yesterday, I believe a 8 to 10% drawdown in the S&P is unlikely to be seen in the near term, even following the current debt downgrade. In 2011, we got an 8% downgrade. In 2023, we got an 8% downgrade or downturn in the S&P. And then the markets bottomed in October of 2023. But Dan Niles is saying the pull forward of demand due to the fear of tariffs and technology export controls should support economic activity in the equity markets. I believe a new high in the S&P 500 is still possible. This is a guy who cash was his largest position back in February. So you've got a guy who's saying, hey, I think the S&P all-time highs is very possible here, even though he was pretty bearish in February. But this pull forward in demand should also result in less than expected demand over the holidays. A more severe decline in the markets is something I will probably be concerned about later in the year, but not currently right now. Not bad. Not bad. I don't know if Dan Niles bought at the end of April or the early April. I do think he started nibbling here and there. I don't know if he went in aggressively, but cash sounded smart until it didn't. And then, the markets turned. And now if you're in all cash, it's just a weird spot to be in because eventually you're going to have to allocate. Your dip came in April. And if you didn't buy on that dip, then waiting for a really aggressive one again, it's just going to be hard to see if we get there. S&P 592. S&P down about 0.32% right now. QBTS, shout out to that one. Great day on D-Wave. $13, up 6.4. I think it's up because Jensen said, or rumors are, that Nvidia is investing in a quantum company, PSI Quantum. And that's pumping a lot of these well-known quantum names currently right now. Skrelly short on quantum is not working out. It is not working out, at least not right now. This could be a 2018 repeat. Yeah, and the scary thing about a 2018 repeat is that means that December we're going to get a tank. But then again, remember, Jay Powell was raising rates in 2018. The difference here is that he's not raising. He's also not freaking cutting, but he's not raising. And although he likes dried grapes, I don't think he's going to be raising rates as easily. So as a result, maybe the similarity to 2018 is not that similar. Also in 2018, we had a trade deal towards the end of the year, whereas now with China, looks like we might end up getting that trade deal sooner than later. I'm not saying it's going to be the most sophisticated deal, but at least a framework for that deal might happen way sooner than expected, which would also be different from 2018. And then hopefully, if we can get a freaking rate cut anytime soon, that would be nice. That would be something that we would need to see. Let's get an update right here on Chinese producers and the White House saying that they will be absorbing the cost of tariffs. This is a new update we got here from the White House.
Meantime, speaking of tariffs, we are getting some breaking news on that from the White House. Let's get to Eamon Javers. Hey, Eamon.
Hey there, Carl. That's right. White House Press Secretary Caroline Leavitt talking about this Walmart issue and tariffs just a short time ago here in the White House press briefing this morning. She was asked, and part of the political difficulty for this White House is that the president's position has been that the Chinese are paying the tariffs, not sort of acknowledging the reality of the situation, which is that tariffs are charged to American importers at the point of importation. So American companies pay the tariffs. Their position has been that the Chinese are paying the tariffs and will eat those costs. So Leavitt was asked a short time ago whether or not that means that the president's tweet about Walmart means that, in fact, Americans will be paying the tariffs. And she did not agree with that. What she said was, she said she feels that the CEO of Walmart made that comment while he was on an earnings call, and she feels that CEOs on earnings calls are expected to give the worst case scenario. They say that the reality is that Chinese producers will be absorbing the cost of tariffs, and that's why China was so quick to hustle to the table. And inflation, she pointed out, is declining in large part because energy costs are coming down. And Kevin Hassett, the chairman of the Council of Economic Advisors, this morning said, or National Economic Council, I should say, this morning said the same thing. He pointed to energy costs and inflation when asked about the Walmart comments, saying that those costs are coming down, and so therefore costs for Americans will be coming down more broadly, guys.
Thank you very much, Eamon. Of course, we know that retailers could try to ask producers in China to absorb some of that, but you are right. The tariff is actually charged on that bill of lading when it comes into the United States. And so whoever owns those goods when they come in, that's
and the argument,
tariff bill.
The argument, Courtney, just real quick, the argument has been from this White House that, even though the tariffs are charged to the American importers here, they can have a lot of leverage in pushing the Chinese suppliers because the Chinese suppliers need access to the U.S. market, right? They need access to the U.S. consumers. So their argument here has been behind the scenes, they can force the Chinese suppliers to eat the cost of the tariffs because of that market access issue. And that's a question for retailers to tell us whether they're having success in those kinds of negotiations.
Right, exactly. That's a very good point. And Walmart CFO did tell me, look, we're talking to everyone in the supply chain and all of our suppliers and vendors and seeing who can do what along the way. But it seems to remain that no one party is going to be able to absorb all of it. And at best case, maybe it will be split between the parties before it gets to the consumers. But
look, that would be the best case scenario for consumers. But if that doesn't happen, obviously, consumers will have to pay a little bit of those increase in prices. So I think the White House is going to try to find a lot of different ways to not be held accountable for the increase in prices. I mean, they've got the egg prices down, grocery prices down, oil prices down. Now they just really need to show that the tariffs aren't inflationary. And it's going to be, a long summer for them to kind of figure out how to shape that narrative, especially if Walmart really does, aggressively raise prices, which I don't think it seems like they're going to be raising prices on literally everything, but there might be some products here and there. And if the White House can get away with it and they get these trade deals over the summer and earnings growth is strong in Q2, I mean, again, given all the updates we got from the Saudis, from Nvidia, from all AI investments, Google, Salesforce, Oracle investing $80 billion. I mean, there's just a lot of different bull arguments, I think, to keep this market afloat. Along with the fact that the institutions have to chase. So I think the two concerns right now are the credit markets, what's going on with bond yields, and then ultimately if Jay Powell is going to cut. Like those two things that go hand in hand with each other are going to affect equity prices. But as of now, it doesn't look like this market is scared of anything. Again, Moody's, last time they downgraded us was 2011, over a decade ago. So this was like kind of a big deal. That's why the market reacted like it did on Friday. But when you actually think about it for more than 2 seconds, it's like, is it that big of a deal? You know, like it's a big headline, but is it a headline with implications? And as of now, market's basically flat on the day, if not green. And they're saying it really just does not matter. Nvidia right here, 135, down about 0.22% on the day. All right, folks, that is it for me. I'll be back on the market close. Pretty much a relatively neutral day so far. We have that Putin update coming hopefully in the next hour. I'll get you guys updates on that on the close. And then from there, we will get more thoughts on what happened. This China stuff in regards to China being upset at the U.S. around export controls, I think we need a response from them soon. So hopefully we get a White House response to China. We get some updates from this Putin meeting. Zelensky will be calling Trump, so we'll get an update from that. Maybe Trump is able to broker something that gets everyone to get into the same room. And we'll see how the markets react to that towards the end of the day. We don't have any big earnings this week. Today we have nothing. Tomorrow we have Palo Alto Networks and then Home Depot. Those are big ones. And then on Wednesday we have Target, Lowe's, TJ Maxx, and Baidu. And then Snowflake after the bell. So those are big ones. And then Thursday we have Workday, Autodesk, Intuit, more software companies. Analog Devices, TD, that's a bank. Williams Sonoma is on Thursday. That'll be great to see. And then next week on Wednesday, this is the big one, Nvidia on the close. Nvidia on Wednesday with Salesforce. That will be the big one. I'll be live with Jose. And yeah, we're going to try to see if Nvidia can really, really show some incredible numbers and show that their growth is not being halted by anything, regardless of what's going on with China or with these tariffs. All right, there we go. Word of the day. Word of the day is Felipe. Word of the day is Felipe or Philippe's or however I called it. Word of the day is neat Nick. Neat Nick.
Neat Nick.
A person who's extremely neat about their surroundings or appearance. Okay, the meticulously curated Instagram grid was designed by handpicked neatniks. The new roommate turned out to be a total neatnik, labeling every shelf in the fridge. Kind of like a perfectionist, but more so around, being clean around everything that you have. I think some people that have a little bit more OCD tend to be neatniks as well. I like Felipe as the word of the day. What did I call it? Philippe? It's a Patek Philippe, right? I called it Felipe. It's a Patek Philippe. Elaine says, my husband is a neatnik. Yeah, dude, my mom. So I didn't even tell you guys the funniest thing that happened over the weekend. I'm moving out in August. My mom knows I'm moving out in August. So guess what I do when I wake up Saturday morning? Your boy's cleaning the garage for 3 hours and making sure everything is neat and clean and readjusting the light bulbs that haven't been adjusted for 2 years because my mom knows I'm moving out and she's getting her money's worth out of me. She is legit getting her money's worth out of me. And I have a weird feeling that even when I move out, I'm going to be coming back every other month to be able to clean the garage. But yeah, I woke up on Saturday and she was like, you know what? You're moving out soon. So you gotta do a little bit of work. And I spent my Saturday cleaning the garage. And then I got a car washed, bro. And I had to drive a gas car like 20 miles. And it was just like so weird because I've consistently been driving the Tesla. But there was such a long line at the car wash on a Saturday. I should have expected it. But I was there for like 2 hours because there was like 10 cars in front of me. But regardless, getting some work done. And yeah, that's kind of inevitable given it's what has to happen before I move out. By the way, my mom is texting me right now, dude. She just sold 7 covered calls on Hood for $67 for May 30th. And then she sold 1 Nvidia covered call at $137 for May 30th. She picked up $1,400 in premium and she's ecstatic. She is so happy. I've been trying to teach her more about covered calls. She understands puts, but now she's getting into covered calls. And she's like, look at this. She is so happy, bro. She's like, let's freaking go. 1,400 in 10 days. Now, let's see how she reacts if Robinhood gets to 68 and she's underwater on those calls, because then she's going to have to deal with it. But still, it's pretty cool, dude. It's pretty cool. There's a lot of power in being able to sell options. Lots of power. And for my mom, someone who, is used to a W-2 salary, she doesn't know what it's like to get $1,400 by clicking a couple buttons on Robinhood. So very empowering, dude. Just the broader markets in general. Very, very empowering. And it'll be a little bit disempowering when I tell her she has to pay 30% on that $1,400 in taxes. But still, it really is one of those things that can change your life. So very, very exciting stuff. All right, cool. There we go. That is it for me today. Jack says the stream never ends when a bit says it's going to end. Dude, I might as well just be live every day, dude. At this point, for 8 hours a day. I think eventually it'll turn into just being live every day. Robinhood 63 at $30 to that. 63.09, that's up 2%. Nvidia 135.60 going green. Tesla 339. Palantir 126.06. 126.10. And then the S&P 593, very close to going green on the day. If we hit 594, we will be officially green on the S&P. There you go. There you go. We will do a 24/7 stream when I move out. When I move out, we will do a 24/7 stream. I'll have a bunch of guests come over. It'll be fun. It'll be a fun one. We'll do a full 24/7 stream. But I need to set up the studio, set up the place, and then it'll be fun. It'll be a cool one. So we'll see what we can do. But overall, just going to keep going every day. And, I think moving out in August, it'll be fun. We'll have a bunch of different types of content planned for everybody. Dude, Steve, this man, he just texted me. Why is he at a bakery right now? He just texted me. What freaking New York bakery is he at right now? This guy, bro. This guy freaking, talk about a sweet tooth. This man has a sweet tooth. All right, cool. That's it. Thank you, everybody. I'll be back at 3:45. And we'll keep going from there. All right, everybody. Have a good one. See you guys in a few hours.